Why food prices could go even higher. This has been the theme for the last several months. Of course, the food portion of inflation has been high for the last 2 years as inflation has rose, peaked, and then come off. But a lot of people harping on this food part of the equation, because even though inflation has gone here in the US from near 0% a couple of years ago around the start of the pandemic, peaking to 9% in the middle of last year, and now coming off, and you can see in that first column there in that maroon red color, coming off to about 5%, about half of where it was at its highest level. Food inflation there in the blue is still at about 8%, and it's the most significant part of the CPI or inflation rate calculation here. It's been the stickiest part of the major categories, and you can go at the U.S. Bureau of Labor Statistics, you can go even deeper into the food portion and see, how it's pretty interesting, but I didn't want to go too deep here because I wanted to bring this back to trading and let you know why they're still up here and where they could be going even higher here as we bring in some summer seasonality to the agriculture equation. But yeah, you can go even deeper into that at the U.S. Bureau of Labor Statistics website and compare the price for eggs to bread to a bunch of different things. It's very, very interesting. But I want to keep it, though we've gone deeper into inflation here and seen that food is the biggest piece that's keeping inflation relatively high. As you see, energy is showing deflation, so to speak, but that's mostly because crude oil and energy prices in general went to, I think it was like 20 or 30-year highs last year. And so they're normalizing, but that's showing as deflation here. But food, obviously, the part of inflation that is sticking around. And we see it in our supermarkets and in our restaurants that food prices have stayed quite high, even though the price of gas at the pump has come significantly lower from its heights. And so, what goes into this? Of course, there's a considerable amount in the meat production part of this, and there's been a lot of talk of how the loss of a bunch of chickens from recent bird flu and stuff like that has driven the price of eggs higher. But also it's been agriculture markets in here. We've seen very high relative to past years, very high prices for corn, soybeans, and wheat. And you see in that gray price, wheat has actually come off significantly, which will factor into a lot of your breads and cereals and what have you. And we're still seeing this high food inflation here. Where can we go? Obviously we can get back to the heights of 2022, but you compare where we're at to where we were at in 2020, we're at very low prices for corn and soybeans and wheat at that time, and we're still above those prices. But especially in wheat, we've seen a lot higher prices, and we are approaching, I bring this up because we are approaching the seasonally volatile period for these agriculture markets. It's no coincidence that you see the spikes in prices here occurring in this 3-month chart. If you look back to the most recent spike in prices, I'll be damned if that doesn't occur right around May, June, July of 2022. The spring to summer months there. You go back 1 year further to the second most recent spike in prices for agriculture markets. And again, right around May, June, and July, falling lower there in September of 2021. And now we find ourselves right in that same time window. We're here in May, getting into the seasonally volatile time of the year. And here I have the option prices the option volatilities, that is, for these three agriculture markets. And you can see that wheat volatility peaking right now here in May and due to come off lower in the coming months. Corn and soybeans both showing the most volatile time and their option term structure here being July and August, and then falling back in the October-November period. This is the what's called growing and harvesting part of the year for these agriculture products, and that's what brings the volatility along with them, and that's what you've seen historically has brought these spikes to the prices for these products that go into the food products that factor into inflation. And now, all of that being said, this volatility that is, the option market is projecting, that historically we have seen around this time of year, doesn't have to go in one direction. It doesn't just have to go up. Agriculture markets, though they're projected to be more volatile, and though historically they've been more volatile this time of the year, and historically the last couple of years, that volatility has been in the upward direction before coming down in the fall, that's not guaranteed. You could see this volatility occur in the opposite direction. And I mean, that's, kind of to my point here. Of course, you look at that wheat chart and you look at the time of year that we're approaching here with that gray line, and you would maybe say, wow, this market has fallen significantly since last year's seasonally volatile period around May and June. This market's due for a jump higher, and that could obviously press our food prices a lot higher. But wheat still was lower than where it is now in 2020, and corn and soybeans are still much higher than they were in 2020 as well. And so there's room that they could cover to the downside. Of course, if history the last couple of years is an indicator of what occurs this year, which it is not, then we could see these food prices climb back higher again, higher than they already are at around 8% inflation year over year. But also, I brought up that energy piece as well. You could see food go the way of energy here in inflation, bringing us back down to a net inflation that is closer to 0%, or at least 2%, where the Fed wants it. Because, we just saw energy make this case for agriculture markets to potentially come down to a more normal price. So, of course, could food prices get higher, could get a lot higher? Yeah, absolutely, especially if the agriculture market volatility that's due to come here in the summertime is to the upside. But energy markets just went through this normalization, if you want to call it that, whereby crude oil and natural gas prices fell significantly throughout the winter of 2022 to 2023, causing the energy part of inflation to come down to actually a negative value, and food could go that way as well. Of course, we're all hoping for food prices to diminish here, but we're going to look to wheat, corn, and soybeans to tell us where they're going in the future.
Okay, well, we'll see about that, right? We will see about that. And as it stands now, the S&P is up 0.4%. The NASDAQ is up 0.5%. The Dow's up just under 0.4%. Crude oil's up just under 0.8%. Nat gas is up, well, it's about flat actually, up just under 0.1%. Gasoline futures up 57 or 0.57%. The VIX is down. I love that. Bonds. So this is the bond price, not the yield. So they got the 10-year falling. So the yield should be up. Let me check the trading view. See what that says, but da-da-da. No, don't have much data yet. We'll come back to the bonds. And the dollar, let's see, where did the dollar? I guess the dollar is about flat. So I, 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 I feel that we are going to get a lock change soon. If you follow me, if you follow what I'm saying, the lock will be changed, or the lock is being changed as we speak. They're changing the locks. Bonds affected by the debt ceiling agreement. Yeah, and I don't know exactly what that entails. I haven't looked into it, but I do know that they're predicting a relief rally for the bonds because of this agreement. But my point was, yeah, okay, that's cool, but where did we see the stress taken out in the market? I mean, certainly not in the tech side of things, but let's see here. Because let's see here. I mean, right now we're sitting at what, about 11% up. I'm not seeing anything here that's like I don't know. It's just it's a okay. So I had food being delivered here. Um, and I think I'm just managing that here. Okay, good. Oh, that's all good. So anyway, let's switch back to the whoop, normal view here. So are we in for another week of stupidity? Another week of ridiculous, unwarranted, mechanical, manipulated rallying on AI mania based on no fundamentals that can be found in any of the AI guidance for any of the AI related companies, except seemingly NVIDIA, which is predicting $4 billion in extra revenue next month. It's unclear where that is coming from or where that is going. It does not seem to be indicated in anything that's in any earnings report of any related either suppliers or customers of NVIDIA. So we'll see what happens there. Is it a scam? Is it BS? Manny says crypto's pumping. Oh boy, here we go. Here we go with this nonsense. Oh wow, it is pumping. Holy shit. Oh yeah. They averted a debt ceiling crisis. So what does that mean? Oh yes, we must pump the market. I mean, unbelievable. Unfucking believable. This shit is just, it's so fucking ridiculous. Here we go. Okay, 1 second, guys. Okay. All right. So Charlotte hopes it pumps so she can dump all the shit stock. Now that's what I'm talking about. All right. Let's see what we got going on over in AMC Fantasyland. Oh, well, this is interesting. Imagine that. They are predicting. Look at this one. Oh, where is it? Breaking, massive deal reached. AMC squeeze officially here. So now we're connecting. Now we're connecting the debt ceiling deal with the AMC squeeze. That's fantastic. That is absolutely fascinating. Why don't we start with Donnie? Fuck it. Let's start with Donnie.
Financial advice, not legal advice for entertainment, educational purposes only, and anything I say is my opinion.
And I'm going to eat my Dairy Queen.
Any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button, all that YouTube algorithm stuff, so you get the videos I put them out. So you don't think, see, man, a lot not data, but like I tell every day, the data.
Yeah, I thought the default was right. That's like about the same level of logic as, oh, we're going to get a relief rally in the market because of the debt ceiling. Like, when did the market crash because of debt ceiling fears? This market's ridiculous. It's not based on shit. It's based on absolute fucking nothing. Man, children of fucking Wall Street and mainstream media. Absolutely insane. This is all inflationary, by the way. All of this shit prolongs inflation. So thank you very much, Wall Street, fucking mainstream media cucks. Fucking ridiculous bullshit. Okay, I'm gonna eat my food and listen to Donnie. You guys ready for some verbal diarrhea? Let's go.
Listen.
The
hedgies, the bad actors, and their co-conspirators.
In other words, the
movie industry is dead. Everybody's going to streaming, and the AMC is going into bankruptcy. That is their narrative. That is their reason for the reverse split. That is their reason for illegally manipulating the price down under $5. But the numbers say the exact opposite. And like I tell you in the previous videos, why is Cinemark trading at such a high price and AMC is under $5? We know why. Criminality. And the fact that institutions own Cinemark and retail investors own AMC. And because of that, they illegally manipulate the price to benefit their narrative. But that's not the purpose of this video. This purpose of this video is the entire movie industry as a whole. Since the pandemic has been over, we are slowly rising back to pre-pandemic movie numbers, and I believe, and this is just my opinion, I'll tell you to buy, hold, or sell AMC. I believe that AMC will be profitable by the end of 2023. That's just my opinion. Once again, I'm not telling you to buy, hold, or sell AMC. That's just what I think by looking at the numbers. In 2022, we had $2.3 billion in sales in the movie industry. $2.3 billion in 2022. We're only in May of 2023, and we've already surpassed $2.9 billion. Okay? So if you do those numbers, we're gonna surpass what, about $6 billion for 2023? If we're at 2.9 in May, there's a distinct possibility with a lot of blockbusters coming out that we're gonna surpass $6 billion by the end of 2023. And that would be out of this world, because let's think about it. In 2018, it was $4.3 billion. In 2019, it was $4 billion. And we're on pace to do $6 billion in 2023, surpassing the pre-pandemic numbers. So anybody that tells you that the movie theater industry is dead, they're not looking at the numbers. They're just looking at all that money they're losing in their portfolio from shorting AMC. And the fact they control mainstream media
makes no sense. They aren't losing money. They aren't losing fucking money. What are you talking about? We're going to look at those fucking numbers, see if that's accurate too.
Analysts to put out any price target they want because they control the narrative, but they can't control the numbers. They can't control the numbers because there are blockbuster movies coming out. I mean, we're breaking records in movies, in movie ticket sales, in concession sales, and it just keeps getting better and better. Anyway, please leave some comments. Tell me what you think. Do you think we're going to surpass the pre-pandemic numbers before the end of 2023? And will AMC be profitable by the end of 2023? Anyway, have a great day. God bless, and I appreciate y'all on this journey with me.
Okay, so you know, the problem here's the problem with one of the problems with this shit. Let me bring it up here. So looking at the numbers here, you know, yeah, sure, you can look at revenue. You can look at the revenue line if you want, but what does that really tell you? I mean, how about if we come down to the margins, you know, and look at like the operating margin or the profit margin or the free cash flow margin or even the EBITDA margin. I mean, it's less negative, but it's still negative. Still negative. And of course, net income also negative. So, I mean, you can hype the revenue number. That's a very, I don't want to say irrelevant, but it's only part of the story. I mean, but can you expect somebody like Donahue George, who clearly doesn't understand how short selling works or what any of this shit actually even means? Why would they borrow shares that they think are worthless? Well, because they're going to short it, you dumbass. Because that's what you do. You borrow fucking overvalued shares that you think are worthless. Such garbage. So you can't really go off of, you know, obviously. Obviously. Also, yeah. Let's see. I mean, you got to be kidding me. And look at this clown here. Fucking lottery stocks. NBC on retail. We run the market. Oh, yeah, do you? Retail runs the market. We're still on that narrative. We have now passed back into this garbage, this retardation. I can't believe it. Can't believe it.
Wall Street piling into the trade, helping the tech-heavy NASDAQ gain 2.5% this week. Its fifth straight week of gains. NVIDIA's blowout earnings and guidance, and Marvell's forecast for quote-unquote tremendous potential in AI, adding fuel to this fire. But there's an unusual dynamic under the surface. Retail traders appear to be sitting on the sidelines, even as the stocks are rallying. Individual investor flows into AI-sensitive names have been muted, according to research firm Vandatrack. So why isn't the AI hype driving traders back into the market?
Hold up, from my highest viewed video, is this really the naked shorts yeah lady speaking on retail again with her same main man?
there's a lot of people, there are a lot of short sellers out there that have been borrowing stock they didn't have. In other words, yes, I think there are dynamics where retail retail investors can get caught.
It was at this moment
but
that he knew.
It's really
As they were doing then, they're doing it now. It's all scripted, but they're arguing retail.
This is the dumbest shit I've ever heard. Nothing about what was said indicated naked shorts. Nothing about what was said indicated naked shorts. Selling stock you don't have, that's called short selling. Not naked short selling, it's called short selling. But since these clowns don't understand the basics of the definitions of this shit, this is what you get. This is what you get. I mean, it's absurd. It's absolutely absurd.
Retail sentiment and if retail left the market or not. In this clip, you're going to find them talking about AMC, Bitcoin, and how retail traders basically aren't investing anymore and they're afraid. However, you'll find a disagreement, which of course I disagree as well, that actually shows something's about to happen with the market, and in fact, institutional investors are the ones who are afraid, as well as banks, not really retail. If anything, retail is jumping into everything right now as we speak.
Or maybe
So retail is retarded like always. Retail is irrelevant. Retail is uninformed. They are late to the party and they're going to get crushed. That's what I'm hearing. What I'm hearing.
another leg higher. Grasso, what do you think?
So I think the retail investors normally like cheaper stocks. They like lower price stocks. They can buy more of that stock. And if you look at during the meme era of stocks, they were buying a lot of cheap stocks, a lot of heavily shorted stocks. You can't say that now. NVIDIA, no short interest. NVIDIA, over $300. So I guess if you look at C3 AI, that's as close to it as you can come. Look at the chart on that one. That looks to me like retail investors have been buying it, selling it, buying it back. Cheaper stock than NVIDIA. It has, its name is AI, right? So that one probably tests that premise right off the bat.
Yeah, and its ticker is AI. How much is that ticker worth today? Banu, what do you make of this trend? And do you think, it's just a matter of time before retail starts getting in? I mean, the point in the note was also that it was banks doing a lot of the inflows into some of these names.
Yeah, I think Steve makes a lot of good points, and I agree with some of them. I'm kind of looking at the same thing, but from a slightly different lens. So let's take a look at some of the names that were heavily involved in by the retail, right? Tesla, AMC, GameStop, and then Bitcoin. Tesla's down 50% from its 21 peak from 407 to 197. AMC down from 3640 to 474. GameStop from 81 to 2373, and Bitcoin from 64,000 to just shy of 20. So I mean, if you look at the carnage, what do you think that does to the psyche of a retail investor? I mean, a professional investor would be taking pain. It would likely have his risk manager tapping him on the shoulder right now. So I do think there's a certain psychological aspect. And then you look at like the housing boom that happened throughout that same period. That offers an alternative to where you would be investing those dollars. So you've been burned in this high volatility situation. You're now able to park your money in a more stable asset and get similar appreciation. And the last thing is just with the reopening of the economy and return to offices, we can argue the extent thereof. You just don't have as much time to fixate over how you're going to be trading your portfolio around. So I think those three dynamics together make it, a bit more challenging for the retail investor to participate.
Are you surprised by this guy?
I'd agree with what Steve said and Bonowitz said. I think that's exactly right. Steve's point about these stocks are expensive in terms of a price level makes a lot of sense. And Bonowitz's point about these folks getting burned, look at AMC, look at what GameStop is. Bitcoin is a great example. On top of which, I don't think people have the time necessarily that they had in the peak of COVID when a lot of people might have been home working clearly, but had more time on their hands to actually trade stocks. So I think it's a function of all those things. I don't know if it's a tell necessarily on the market or where we're going, but I think it's important to bring up. And I think to a certain extent, I think we've explained a lot of the reasons why they're not there.
Yeah, but maybe the tell really is the inflation in these prices. And I don't mean to cast aspersion on the term by using that term, inflation, meaning just the stock's going up by so much, Tim. I mean, what does that say about the markets and how quickly this happened? I mean, these are just jaw-dropping gains in just a couple of trading days.
Well, and I'll disagree with all the guys just to be that guy today. I think the retail investor is here. I mean, look, I think the retail investor never ran very far. If we look at more of the broader flows from retail investors, especially during some of the peaks of market, call it volatility and whatnot, the retail investors actually hung in there. I look at Microsoft and Apple within 2% of all-time highs. I look at semiconductors breaking out to all-time highs, and I think that was, obviously, we know what NVIDIA did this week, but look at semiconductors more broadly as a group. If you're using the SMH, you can see that actually not only do we break through that December 2021 relative high to the S&P, which is, I think, a very important point for the market here. Semis are leading the way, but back to the retail investor. The retail investor through difficult times, and we talked about this also at various times, where almost your Microsoft, Apple's, Amazon's, Netflix at 52-week highs were almost seen as the money market stocks for the retail investor. So retail flows overall actually belie the view and the theory that the retail investor is not getting involved in this market. And if anything, the institutional positioning and the sentiment we get from Bank of America and all the other folks that measure where the professional community is say they are the ones that are most nervous and most underweight this market right now.
Yeah, and maybe also the fact that NVIDIA had such high short interest going into the year, really tells you sort of that the institutional investor might have really questioned this and not traded this one particularly well.
When NVIDIA, when you look at them, they started off as a gaming chip stock, and they were doing just under $2 billion in revenues from that. Then it became a data center story, and they were doing double that amount. Now it's become an AI story, which in conjunction will use the data centers and the gaming chips. So now everything is clicking all at once. But these valuations have blown out to what we considered.
What about the cryptomania? What about the cryptomania? Yeah, NVIDIA was supposed to be crypto too. Supposed to be metaverse too last year. Garbage. It's total garbage, if you ask me.
Extended now are tremendous, enormous, use any word that you want on it, but it's very hard to figure out where you should be a buyer of these names. Sometimes you just have to hold your nose because expensive stocks have a way of getting more expensive. Cheap value stocks get even cheaper.
But I think part of this is just the radical change in the perception of NVIDIA and a lot of these chip stocks in just the past couple of months. I mean, remember in March, NVIDIA was announcing a 4% cut to its workforce. I mean, things are viewed completely differently just a couple of months ago, Guy. And here we are talking about NVIDIA and talking about AI basically saving the market. I mean, take a look at the massive gains in the mega cap tech stocks thanks to AI.
Yeah, no question. It's saving the market for now, for sure. But I think, as Carter's going to say in a couple minutes, is it's setting the market up for something else. And NVIDIA, you go back a couple quarters, and they weren't saying particularly great things. And then the AI realization came, and they really hammered that home. They did a remarkable job, a masterful job of sort of focusing on that when some of their other businesses were not doing as well. Now, those businesses are catching up to a point. But again, to Steve's point, valuation right now at $1 trillion effectively, I'm rounding up clearly. It's even if the most ambitious people out there in terms of revenue, you're talking about a stock that's probably trading 25 times revenue. That's historic for a chip stock, especially with a chip stock with that market cap, which we've never seen before.
Yeah, I mean, $1 trillion valuation on $27 billion in revenue. I mean, listen, there's no argument against the fact that the valuation is stretched. I don't really think that's what it is. What I think, to me, at least, is that NVIDIA is kind of viewed as this tangential play, as opposed to a pure play, which inherently will have more risk to live and die on this AI theme, so to speak. So NVIDIA still has this use case well within gaming. You saw the same type of dynamic happening with the whole Web3 move, right? Meta came out and announced it. The logic was that, listen, you're going to need this processing ability that NVIDIA clearly has a leadership position in order to kind of make this move. And I think it's the same situation with AI, where there's still an underlying operating business that supports at least some type of cash flows there. And then you have the upside with the AI adjacent, as opposed to chasing a name that is going to live or die on its ability to deliver on the AI front.
But all that said, do you like NVIDIA here?
I do. I mean, although I have trimmed some, but that's just about prudent risk management. But in terms of, did I get out? No, I'm still in.
Okay. So, Jesus Christ. So, let's see here. I'm looking at, let me see here. This Seeking Alpha. This is from February. Q4 earnings expected to fall 60%. This was earnings that came out the end of February. And according to TradingView, they actually beat the earnings estimate. But these estimates are garbage. They're, you know, massaged as far as the expectations go. Let's see here. Wait to the next quarter. It's all we can do, but I just don't see it. By the way, there is a great video by the Maverick of Wall Street regarding this very topic. Here, putting this in the chat. I think that's right. I don't want to play all of it, but I just want to go to a section here. Go to one of these sections here.
Actually adds up or not. We start with the revenue. As you can see, year on year, the revenues are down about $1.1 billion. And of course, you might ask, wait a minute, why would the stock pop 30% in a single week when the revenues are down year on year? Here it is. It's all about the revenue guidance. They say revenue is expected to be $11 billion plus or minus 2%. And this is not for the year, folks. This is for this upcoming quarter. Now, they also say that GAAP and non-GAAP operating expenses are expected to be approximately $2.71 billion and $1.9 billion respectively. Now, this is not a huge bump from the expenses they have this quarter. So what's going on here? They see massive leap forward in revenues, but with very little increase in expenses. Something doesn't add up here. If you're going to expand your revenues dramatically, your expenses should go higher too, because there is a cost in manufacturing, designing all of these new chips. Unless, of course, it's a pricing story. We'll talk about that by the end of the video. And if it is, then it's a transitory bump. Just keep that in mind. And here's what they say. The first quarter revenue was a record for data centers, because this is what really matters when it comes to AI. $4.28 billion, up 14% year on year and up 18% from the previous quarter. And they talk about, of course, their cloud platforms, most importantly, this new chip that everybody wants to buy. So who's buying? Who's actually generating the leap from 7 billion to 11 billion in a single quarter? NVIDIA says Google Cloud. And they also say, if you read this, you can pause it, you can read it for yourself. The NVIDIA H100, this is the most important chip. They say Amazon Web Services, Google, we talked about that, Microsoft Azure, and Oracle Cloud Infrastructure. They also talked about a partnership with ServiceNow. They talked about Medtronic. They talked about Dell Technologies. All of these are future projects. So we have a few names here that we can play with. Let's go back to the investigation board. If NVIDIA sees massive increase in revenues, huge orders coming in, then we know that NVIDIA is the designer of these chips. They're not really the manufacturers. They're not really the suppliers. So if what they're projecting is real, we should see the supplier, in this case Taiwan Semiconductor Manufacturing, whatever, TSMC, we should see a huge rise in their outlook too. Because all of these orders that NVIDIA is receiving, TSMC will be the manufacturer of these chips. Likewise, if NVIDIA is seeing this huge massive increase in revenues in a single quarter. Somebody's paying for that. So who's paying? Is it Microsoft? Is it Google? It's Amazon, Medtronic, ServiceNow, Oracle, China? Who's paying? Because we know all in all, if you look at the worldwide semiconductor revenues, they're down big year on year, down almost 21%. And the reason is we know what's going on with the economy. China's slowing down, the Fed is raising rates, the consumer is getting crushed, corporations are reducing spending, and therefore the demand for semiconductors is going down. Not to mention, of course, the inventory glut that all of these companies have. When we look at PC shipments, down big in 2022. When we look at other companies that reported this quarter, same quarter as NVIDIA, nobody said that they're seeing massive increased tsunami in orders. Nobody said that at all, with the exception of NVIDIA. Matter of fact, Samsung reported a loss in the first quarter. Their operating profits are the lowest in years. When we look at Micron, they've also reported a revenue decline year on year in the first quarter of this year. We look at Applied Materials, another important name in the infrastructure of semiconductors. If we're seeing a massive tsunami of orders and huge revenue left in the semiconductor industry, we should see it in this name. We're not seeing it yet. The revenue growth is actually down. If you looked at the earnings from Applied Materials, they're down. Negative sales growth. And the same goes for Dutch semiconductor maker ASML, another provider for NVIDIA. If we're seeing this huge tsunami of orders, it's not showing up in ASML. They say order values actually went down to the lowest level since 2020. If we say, oh, China is the buyer of all of these chips, then how do you explain the fact that Taiwan's chip shipments to China is actually dropping like a rock at 4 years low? Matter of fact, the industrial output for Taiwan, we know that pretty much the Taiwanese economy depends on one company, which is Taiwan Semi. The year-on-year output is actually negative. So we're not seeing any increase in orders in any of these leading indicators, any of these other chip companies. But let's dig more. When we look at Taiwan Semi's earnings for the last quarter, and mind you, this report came out March 31st. Their revenues are down quarter over quarter by 18.7%. Their expenses, if we have a huge order that came out of NVIDIA, for example, we should see something, an increase in expenses at least to cope for that. The expenses are down 14.3%. So it's a company that's seeing contracting revenues, and as a result, they're reducing their expenses, not increasing. Well, maybe Taiwan delivered something, but they didn't get paid for. Not yet, at least, so we have to look at account receivables. That's actually down 36% quarter on quarter. If there is a huge order for AI chips, which uses the 5 nanometer technology, we should see increase in revenues from this segment for Taiwan Semi. But this is not what we got in the latest report by the company. And now you might say, but Maverick, maybe the revenues all in all are down because of PC or smartphones. But if you segment the revenues, you might see an increase in data centers and orders for these AI chips. When we do that, all segments with Taiwan Semi actually down. We're not talking year on year. We're talking quarter over quarter, sequential, with exception of automotive. So no orders, no increase at all. Nothing. Maybe something in the cash flow says that they got new slew of orders. We don't see that at all. Free cash flow is actually down quarter over quarter, down year on year. And again, if NVIDIA is projecting this huge leap in revenues from 7 billion to 11 billion in a single quarter, then the manufacturer of these chips should see the same. But according to the latest report for the same quarter that NVIDIA just reported, TSMC says that revenue will be between 15.2 billion and 16 billion for the next quarter. Well, what does that mean? It means a 6.7% quarterly decline. Once again, decline, not an increase. So NVIDIA says we're going to see at least $4 billion worth of new orders in this quarter coming. The manufacturer of NVIDIA's chips says we don't see nothing. We see a decline in revenues of 6.7%. So something doesn't add up here. Now let's look at the suspect itself, NVIDIA. If
Okay,
NVIDIA is seeing this,
so basically, you know, I just wanted to show this how he's doing this analysis here, looking at suppliers and customers, and he goes through all these and he looks through the earnings and guidance, and essentially none of these companies that were named in NVIDIA's guidance have anything that could be construed as relating to this $4 billion. So the question is, okay, where is NVIDIA getting this from? We could know something that we don't, but there's no indication. In fact, most of these companies are saying the opposite. So, what do we got going on here? Steady rise in the dollar, but I'm anymore. I'm having a hard time figuring out these correlations because it really, a lot of times, it don't make sense. At least not to an idiot like me. Okay. Okay. Back over to AMC for a bit here. I don't know who this is. Stas Hawks Stocks. But he says AMC stock is in trouble.
So before we break down AMC, the charts, how it did this past week, make sure you guys get up to 15 stocks for more.
Ay. 15. Wow. Jesus.
Cheers. Let's dive into it. So check it out, guys. AMC did not do well this past week at all. Pretty much every day we took out the lows from the previous day. Maybe not every single day, but it seems like that was the case. You guys can see on Friday the stock went down 6
cents. This guy's starting to sound like Professor Mike.
We went from
every day. Well, maybe not every day.
That was a drop of around, let me see, 5% pretty much from the intraday high to the intraday low. And if I pull the 5-day 5-minute up, you guys will see we started off the week at around $5. That was on Monday. We popped up to about $5.20. Then on Tuesday, that's when the selling really started to kick in. We didn't take the lows out from Monday on Tuesday, but we did on Wednesday. You guys can see on Wednesday
AMC should just announce, that they are initiating an AI campaign, to I don't know, predictively forecast concession stand sales or some shit. They'll see a 20% pop in the stock overnight. Just mention AI.
At around $5. We ended up going down to about $4.80. That was a drop of around 4.5%. And that's when we took out the lows from Tuesday and from Monday. Then on Thursday, guys, forget about it. I mean, this thing got even worse. We went down to 462. Clearly took the lows out from Wednesday, obviously from Tuesday and Monday as well. Then on Friday again, we went down 1.3%, but we didn't quite take the lows out from Thursday. We actually closed at, where did we close? 464 on Friday, and the low on Thursday from Thursday was $4.
All these.
And now that I'm looking at this guy,
cares?
Does this not look like a descending triangle on the 5-day 5-minute? It does to me. I don't know about you guys, but it does to me, which this is not the most bullish sign for AMC in the short term. Let's put it that way, guys. In fact, a descending triangle is very, very bearish. If this were to play out and we fall under 460, the way a descending triangle would play out is we'd take out that low, obviously, and we'd have, from that point, a leg down, maybe down to the, mid fours. Well, we're technically in the mid fours now, but maybe lower mid fours, maybe even lower than that. So let's just say the 5-day 5-minute does not look good at all for the bulls here on AMC. And again, we have that descending triangle, which is not the best sign either for the bulls. And I'm not being a doomsdayer, guys. I know some of you guys are going to hit that dislike button. It's all good.
You're not being a doomsdayer, but you're not being a moon boy either. Not being a moon boy.
And sure, AMC stock could bring
moon boy bullshit.
It could go to $5, $5.50, $6. I don't know, maybe even higher than that. Definitely possible. But as of now, the way things stand right now, the bears are gaining an edge. The high from this past week was $5.21. And again, we ended up hitting a low of 462. That was a total drop of around 11%. And we closed at 464, not too far off of 462, literally 2 cents above that point, guys. So technically, we did lose around 10.5%, 11% as of last week on AMC. And if I pull back the layers a little bit more, you guys can see the 10-day chart doesn't look much better at all now, does it, right, guys? We can see we have a descending triangle, again, like I called out a second ago. That's clear on the 10-day, 30-minute chart as well. And we have a death cross. We're under both moving averages here. That's not good. And we can see we have been making lower lows, lower highs over the span of these past 10 days. And you guys can see on the 20-day chart, it's not looking much better either, guys. So essentially, AMC all of May has been struggling, unlike Bed Bath & Beyond and unlike the entire stock market. If you guys take a look at SPY, which tracks the S&P 500, this thing's been doing pretty well in May. Triple Q has been doing even better, which tracks the NASDAQ 100. This was at 315 to start the month, and now we're pushing 350. This thing is up around 10, 11% in May. SPY is up a bunch. The Russell, the Dow, they're doing decent. But, of course, going back to AMC, it is not looking good at all. And you guys might be not correlated to the overall markets, which that makes sense. But I'm just trying to paint a picture here how everything.
But it is, though. It is correlated to the overall market.
Big tech, small.
The big tech stocks are not correlated to the overall market at this point. That's the thing. The market is being propped up by these names. They're responsible for these massive pops. Most stocks are not doing that well.
Small tech, you name it, a lot of things have been crushing it, but AMC has not participated at all in that rally, which is a little bit worrisome. I'm not going to lie. We do have a death cross here as well on the 20-day chart. We're under the moving averages. On top of that, not the best sign for AMC, at least in my personal opinion. Now we're down officially on the month around, let's see, where do we hit on the 5th? $6.20. Now we're at $4.60 roughly. So officially we're down from the peak to where we are now.
The peak.
So, of course, AMC was already in a bear market, but now essentially it's gotten itself in another bear market. Down, like I said,
double bear market.
25% from $6.20. Not the best sign overall for AMC. And if I pull the layers back a little bit more, we can see on the 4-hour time frame, which you guys probably know I look at very often, especially with, individual stocks. We see here we're under the moving averages as well. And this actually started to happen this past week. Well, maybe the week before that as well. But either way, very recently here, more in the latter half of May, we started breaking under the moving averages on this time frame, and we have a death cross as well. Not the best sign at all. And you guys probably remember I had this channel drawn out on AMC. Let me actually draw it out and see where we're at now. We're not looking so pretty, guys. I mean, this thing is starting to fall under the channel here, which I was looking to see if the bulls were going to hold around $5, $5.15, $5.20, but clearly they're not looking like they want to hold that right now. And the fact that
blah 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 blah. Okay.
The end of April being around there or piss this month, and the fact that we're taking out the channel here and the lows from the end of April from about a month, we see that descending triangle play out. That's where this thing could start dropping to, and that's just what I said earlier in this video. We could break out next week. We could start going, $5. Bed Bath & Beyond, more volatile stock. GameStop, Bed Bath & Beyond, more volatile stocks, crazy volatile stocks. Anything could happen. They're very unpredictable, but as of now, the way things are looking again, bulls are losing their edge. They're losing their edge, which they had for quite some time, for a good 2 months, almost 2 months. The bulls had a grip on AMC. Now the bears are.
I wouldn't call that a grip, really.
As of now, what do you guys think? Let me know your thoughts down below in the comments. Feel free to.
I mean, at the end of the day, it's pretty sideways.
Get your free money from Moom.
Pretty fucking sideways, if you ask me. For basically, I don't know, 6 months, essentially. But I was thinking about what Manuel said here. Wonder why AMC is not looking good. Maybe conversion and dilution aren't good. And, I was thinking about that type of thing. And I think, my opinion, just speculation, my opinion, Well, factoring in the line of thinking, like that, when one side of the trade gets crowded, you need to look at what's going on, because if you pile in on one side, you might get, you know, crushed basically, because Wall Street doesn't like when everybody gets on one side of a trade. Um, and I think that you can't discount that at all in this. I think that, you know, there's so much attention on this, there's so much scrutiny on this, that at the end of the day, all of this attention is, you know, paradoxically negative. In other words, a lot of the apes, the, you know, bulls on AMC, hopers squeeze hopefuls, moass hopeful people. You know, they will interpret anything as a positive catalyst. Clearly, most of these catalysts are fake and or negative catalysts, actually. But because they're being interpreted as positive catalysts, I think that's even more fuel for, you know, declines, because the market has that paradoxical aspect. So I don't know. I'm just shooting from my hip here, or in other words, talking out of my ass. But, or if you really want to boil it down to the basics, I'm bloviating. But I think there's something to be said for that aspect, that psychological aspect of, you know, when you think you've figured out the key to the market changes the lock. Um, and I think that a lot of these people never learned that. So the market is just, you know, the market's cycling through its locks, and it knows that none of the keys that these retail investors have work on any of the locks. So anyway, that's just some thoughts, but and also, you know, there's there's also the you know, the reality that, you know, you can have, sometimes you have companies that whose stock is toxic or becomes toxic. It could just be that it became toxic. I mean, and I would argue that it absolutely became toxic. It's a toxic piece of shit. I mean, and if you think about it, you had a stock that was $20. Part of that equity was taken out, put into this other equity security. That thing was decimated. And now you want to add it back in and convert it and do a reverse split it. Yeah. I don't, it doesn't seem like to me that well, it seems like something that and in this case, I mean, like Adam Aaron and AMC, the AMC board, they thought that they could pull the wool over retail investors' eyes, you know, and spin it as a good thing for them, when in reality, it's a good thing. At least it's not necessarily a bad thing for the company, because, again, AMC is basically, um, you know, skirting the NYSE delisting requirements. So, in other words, they kind of have to do this reverse split, um, in order to ensure that they won't get taken off the exchange right now. Now, they still might later, once it goes from like $30 after the reverse split, let's say, pops to $30, on a smaller float, pops to 30 and gets shorted and sold. Um, you may end up right back down at $3 and being delisted. So I don't know. Well, Manny, you know, we we don't give financial advice, so this is for entertainment and educational purposes only. Mainly the entertainment part. Should you buy it around 4, or should we wait until 72 and the MOS is confirmed? I mean, there's two schools of thought, you know. Um, Buy low, sell high is one. Buy high and sell higher is another. And, I'm not kidding there. I mean, that is a way to look at it, but, um, you know what I think? Why don't you split the difference? Can we split the difference and say, not 4, not 72, maybe like 32, 30, 36, somewhere around there, 35, you know? You hit 35, you're going to 72. You hit 72, you're going to the moon, baby. You're going to the moon, baby. Buy high and sell low the ape way. That's the ape way. That's the Hycroft mining way. It's the GameStop way. Or better yet, buy high and never sell. How about that? Buy high and sell never. You're dreaming if you think it gets to 50. Well, the only reason I'm saying that is theoretically, if you reduce the float by 90%, the price of each share by virtue of math, and this has nothing to do with the valuation of AMC because the valuation stays the same. The market cap stays the same. I'm just giving you back I'm just giving you back a $10 bill for the 10 ones that you gave me. That's all that's happening. So buy high and hold to stick it to the man. If you never sell, you never lose. That's wise words, Ron. It reminds me of the wise words of Ricky Bobby. If you're not first, you're last. If you're not first, you're last. But of course, you can be second, third, fourth. Hell, you can be fifth. So that's the MMTLP, you know, phenomenon too, right? The shorts, they have to close their positions. They have to close their positions.
Is that what you're saying? Is that what you're saying? Or are you saying what are you saying? Huh?
But shorts also can't, if they haven't closed their positions, they haven't taken profits. So I'm not sure what's going on there. We're gonna check Tony out here in a minute. You're gonna check Tony out. By the way, I want to invite everybody to come over to my Telegram finance chat group. The link to that's in the description of this stream. And we got a wonderful group of people there that includes many that are present chat here today on the live stream. Charlotte, if you have ever used Telegram, or even if you haven't used Telegram, it's a very friendly, easy to use app, free open source app. And we'd like to have you and everyone join us there for continuous discussion of these things throughout the week, and just general, camaraderie and companionship in these lonely times. So, and also, let's see here. As if the companionship aspect wasn't enough, we have these amazing custom stickers, and the newest of which I'll show you here. If I can find it. Yeah. Yeah, I got you here. There he is. Tony. Market moves with Tony, and other fun characters in this saga, ongoing saga. So love him. Love that guy. Guy's hilarious. But anyway, we have fun over there. Certainly more fun than this market is. I'll tell you that. No 800 number yet. Model 3, dude. I swear, it's going to happen. One of these days, you're going to come in a stream and you're going to see a scrolling ticker across the bottom with the 1-800 call-in number. Can't be that expensive these days. Got to be able to do it over VoIP, voice over IP. So I'm gonna establish a landline. Well, it won't be landline, but it'll be publicly dialable call-in line number for the those who are less apt to use chat apps, let's say, so they can get involved in the conversation here, call-ins, that kind of thing. You've been joking with Model 3 dude about that for a while. I need to get on that, don't I? That's hilarious. You just wait, you'll be surprised. I just might do it. Okay. Oh boy, I ate way too much. Put it in the phone book. Yeah. You know what? I'll put it in the yellow pages. I'll make sure that I have a large yellow page ad. One of the large ads. The white pages. You want it in the actual white pages. Well, or business to business. And we used to have business to business. Oh, that's going back. It would be, well, yeah. Okay. So let's see here. I know that speaking of business to business, we got this is oh wow, this is TMI. We haven't seen TMI in a while.
An AI boom for the markets. Wall Street piling into
Wait.
the trade, helping the tech-heavy.
Oh, this is the same. That's the same clip that stocking. What's his name? Lottery stock played. Okay, so we already saw that. What about this one here? This is Scavenger coming up.
Guys, and then on top of that, AMC's volume starts dying out drastically, and then all of a sudden you get, talking about
all of a sudden
problems as soon as June. I don't think AMC's like this play that we know that AMC.
This is what happens when you work to change things, and first they think you're crazy, then they fight you, and then all of a sudden you change the world.
Systematic risk to the economy. They've already talked about this in 2021 that AMC, if they would have let it rip, it could have caused major systematic failure in our economy. We already know that.
That's not exactly true. I never heard anyone say that about AMC. They said it about GameStop. And by the way, the guy that said it about GameStop, I believe is full of shit because he's a brokerage CEO. But, this is the problem with this game of telephone. This is the problem with this, hearsay-based bullshit. That's not what was said. Nobody said that I can recall.
There's really no contemplating or arguing that. But I still think there is. But I find it very ironic that, right when AMC's kind of in this moment of breaking out, and
moment of breaking out,
when volume starts dying off, when the court case is starting to look optimistic for the ones that voted.
They're obsessed with this idea of a spring. Whenever the spring is coiling up, it has to explode to the upside. I'm sorry, dude. No, it does not. No, it does not. We're not in a 2021 environment. We just aren't. But anyway.
You kind of have all of these puzzle pieces coming together for a default. and then talking.
We're not going to have a default.
It's going to cause stocks to drop.
We never were going to have a default.
I just find
we were never going to have a default. It was never on the table.
That this is happening all right now, and it would make sense that they're concerned that the stocks could have a drop over a default, because remember, their margin requirements are, based around the long assets that they have in the market. So if their long assets get obliterated, over a default that the U.S. goes through and stocks do crash, I think we can all answer which ones are going to rise. It's going to be the ones that retail investors have been holding, that institutions,
yeah.
hedge funds are.
But guess what? Guess what, pal? You got record short interest. You got high short positions. Okay. So is it really that everybody's so long on the market? I don't think so. If the market crash, a lot of people got squeezed the past couple of weeks because of this AI bullshit. A lot of people, and not just people, a lot of institutions, a lot of hedge funds lost money because of this nonsense. So on one hand, that's the dichotomy that we've got. We've got an economy that is hanging on by a thread. It's in the shitter, hanging on by a thread. It's not going the way that it needs to go in order to normalize prices, normalize monetary policy. The market is just saying, yeah, that's what we're supposed to do. Well, fuck you. I'm buying to the moon. And, to say it's garbage is the understatement of the century. Really, it's completely absurd. And especially to think that this won't be inflationary. I mean, what is it? Is anybody? I don't think anybody here. I'd be surprised if anybody here who has followed me in this channel and generally is, a critical thinker and looking beyond the headlines and all that, which you guys do. I'd be surprised if anybody was surprised about the latest inflation data, for example, or the latest employment data, for example, or any of this shit, for example, because we've been saying this for a while. You can't have it both ways. The market can't keep going up and expect inflation to go down and everything to be right, to go. It's just rosy, soft landing bullshit. That's not the way it works. It's not the way it works. It's not the way you're trying to have the ebb without the flow. You're trying to have the yin without the yang. You're trying to have the positive without the negative. And one thing about, these markets in general, natural movements of anything is that there are fluctuations, there are oscillations. In order to have the up, you have to have the down. We are we are allergic to the down, seemingly, and Wall Street has put themselves in position to be able to protect their interests, create these false narratives, and basically squeeze market participants, based on what I consider to be sixth grade level rumors. I mean, this market acts like a gaggle of sixth grade girls. It's like a group of sixth grade girls in middle school. Anything that anybody says, any rumor, gets blown out of proportion, they play telephone with it, and nothing against, young women. I mean, it could very well be young men, but it's a juvenile, ridiculous, pathetic, really, type of thing. It's pathetic. I mean, we're that desperate to believe in something. We're that desperate for things to get better that we just all critical thinking and rationality has left the building. Critical thinking has left the chat. Afraid to panic. The panic is status quo not being upheld. Panic is Wall Street declines. The panic is, and shout out to Frankie Muhammad here. The panic is the 1%, the elite, the ownership class, Congress people, they start to lose money. They start to lose power and grip on things. And we can't have that. All of this is to serve status quo, to uphold status quo, and to make sure people know, oh yeah, the economy is coming back. While that carrot is being dangled, that's when the pickpocket swoops in and takes all of your money. Not that far off from what happened in 2021, just a slightly different, context, obviously. But I'm very cynical about all of it. I think it's garbage. I do not believe in this system at all. And I've been pretty upfront about that. I try to understand what's given to us. But at the end of the day, when you apply critical thinking skills to it, it really is a situation of what is popular is not always what's right, and what is right is not always what's popular. If you go off of what the mainstream media says and what these idiots believe, I mean, you just get crushed. And you could say, well, but Scott, the market is up and they were all bullish, and so they're all winning and da 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 da. Yeah, but they're not going to take profits at the right time. That's the thing. Right now, in my opinion, this is the time to be fearful when everybody's greedy. This is the time to sell when you don't want to sell. Because when it's time to sell, you won't want to sell. And when it's time to buy, you won't want to buy. Nobody wants to sell right now. That means it's time to sell, in my opinion. But you get this piling in, and you see this shit just continue to snowball. And then you have the whole aspect of, well, most of this buying, a lot of this trading, it isn't even human beings doing it. I mean, isn't that something? AI stocks being pumped by AI algorithms, an electronic market, an automated market, one could say, automated and manipulated by things like zero data expiration options, zero DTE options. I'm still waiting for anybody to tell me what the purpose of these things is beyond manipulating the market, causing gamma squeezes. That's not a legitimate trading approach. It's a trick. It's a parlor trick. It's manipulative. I mean, one could say it's even cheating. Oh, that's nobody ever said that this shit was fair. But that's the problem. We try to analyze it through this lens of the way that things should be objectively. But at the end of the day, we know that the world's not that cut and dried. We're dealing with human beings who are greedy, flawed, corrupt, toxic, all these things. So you have to keep that in mind. And that's one of the things that these guys in their early 20s here, for example. And I'm just, this is Bloviation. I'm just talking. This is my opinion. But, this is one of the problems with guys like Scavenger and TMI and lottery stocks and, all those types of guys, the guys in their 20s who haven't done shit. They haven't done shit. They've had one or two jobs. A lot of them didn't go to, a lot of them, sure, maybe some college, but, how many of these guys have degrees? How many of these guys studied something in depth? How many of these guys ever, wrote a 20-page research paper, for example, and actually passed the class too? So I'm saying they don't have experience. And so they're looking up things on Investopedia and reading headlines and thinking they understand it. And that's not the way it is. I mean, yeah, sure. The book definition is this. The way it's supposed to work is this. But do things always work by the book? No. And if you haven't experienced it and fucked it up, and then had to go back and say, oh, well, what happened? Because Investopedia said it would do this. And then you realize, oh, okay, yeah. Things don't always do what they are quote unquote supposed to. That's why every catalyst we've seen has been false. That's, if you don't understand FTDs, you're going to keep pumping that as a catalyst, even though clearly the evidence does not support that being a catalyst. Anyway. The mild Sunday rant.
Are over leveraged in, and
over leveraged. So there's a key word, buzzword, over leveraged. Over leveraged. I said in Telegram, I think it was last night. Over leveraged has become a catch-all for I don't really understand what's going on, but clearly they're in trouble. So we just say they're over leveraged. Hilarious. Over leveraged. Like most of the apes are or were before they got blown out.
That institutions and hedge funds are over leveraged in, and the bank of margin calls are going to start beginning, the huge inflow of margin calls, and we're going to see what we've talked about needing to happen for a long time. And that's my opinion. So again,
and okay, and that's great, but that theory has not played out. We had a market crash last year. The market went down by 20-30% or whatever it was in the NASDAQ. Okay, the most speculative, overinflated names crashed. And what happened? Well, Wall Street knew. Here's the thing that these clowns don't get. They think that Wall Street just sits there, and waits for this to happen and to wipe them out. I mean, and I hate to break it to Scavenger, but you're the uninformed trader. You're the one who's behind the curve here. Wall Street's already moved on. And if you think that they're going to get crushed when the market crashes, well, I mean, why are we talking about recently having seen record short interest in the S&P? So the evidence doesn't line up with what he's saying. People know that this shit is overvalued. And just because institutions might be pumping something or their algos are, doesn't mean that the actual human beings operating the goddamn computers don't know that this is irrational. Okay, that's an important point, I think. They're just there to make fucking money. They're just there to make fucking money. So why would they stop it? Why would they stop it? But that doesn't mean that they're all going to fucking come crashing down when reality comes smacking them in the face on these highly overvalued stocks. I mean, it's retarded to think that. Makes no sense. If that were the case, Wall Street, how would they have survived? So what I'm saying is Wall Street has more information than we do, has more information than Scavenger does. This notion of a market crash devaluing long positions and causing margin calls on short positions is garbage, because as far as I can tell, funds and whatnot, there's a lot of people that are net short. So, I mean, it's just stupid.
I think that this default is terrible for the economy, but
no fucking shit. But it's not going to happen. It's not going to fucking happen. This is 5 days ago, but still, I mean, this again, this is the first fucking time that you've ever watched the quote unquote debt ceiling debate, and I put debate in quotation marks, air quotes too, because it's not a debate. It was never a debate. The U.S. will not default. They never do. They never will. It would take something absolutely catastrophically different to cause that to happen, especially at the time we're in right now with things being volatile and fragile. You think that that's going to happen? Give me a fucking break. I'm not saying I have faith in Congress and politicians, but This is typical. It's political theater, which most 99% of everything that comes out of this bullshit is political theater, and these clowns buy into it. They buy into the hype. They buy into the fear. Like, come back in 20 years and you tell me, are you still going to get your blood pressure worked up over a fucking debt ceiling debate? Or are you going to realize that it's bullshit and that you've been manipulated? I mean, you know, grow the fuck up.
That are in plays, you know, not only AMC but GameStop, all these plays that move together. I think that
they don't particularly move together anymore. I don't really think they move together anymore like they used to, because the, you know, I mean, interest rates are over 5%.
This meltdown is going to be what causes everything to happen. And remember, nothing's coincidence. I think
Yeah, you said that last year. And how did that work? How did it work? AMC went down with the goddamn market. You only have 100 million shares short. Not that much when the price is $4 fucking.
Kind of coming together here to create a
absolutely zero basis for a short squeeze at this point.
Story at the end of the day.
Technically, fundamentally, across the board at large, there is no basis that I can see for a massive short squeeze. You might make it to $20 if all of the shorts covered tomorrow, which they never would cover at once. I mean, you have to believe in the QAnon conspiracy theories of 6 billion naked shorts. And even then, why would they buy back? They didn't borrow them. I mean, it's just like there's no logic here whatsoever. This is brain dead.
You know, we have
okay. I'll shut up.
Reverse repo loans still at over 2 trillion every day, and that's
yeah, reverse repo loans. What does that mean, actually? What about mean? What does that mean? How is that relevant? Can he tell us? I don't think so. I don't think so. In fact, you know what? Tony, what do you think?
Do I think that's the case? I don't know. I don't really think that's the case.
Neither do I.
The 2021.
You had a depression period also, a couple dark videos. I don't care. I mean, quite frankly, that's not any of my concern. I am not here to provide support for people's depression. You know, if somebody says some bullshit, I'm going to call it out. Leave that shit at home. Leave that shit at home. That's emotional manipulation as far as I'm concerned. I'm not going to come on here, and I've hinted at it in Telegram, and I'm not going to come on here and talk about shit that's irrelevant to what I'm talking about here. Personal details, for example, or all of the shit that I had to deal with last week, for example, because it's irrelevant. And I don't want to color anybody's opinion. I don't want anybody to, you know, feel like they should have sympathy or anything like that. That's bullshit. That's manipulative. I don't want that. But these guys, they thrive on it. They need it. Keep people engaged. And that's the difference, as far as I can tell.
You know, we have.
Oh, absolutely. It was a play.
They're coming out with CBDCs.
And if he was watching Bigums, I mean, God help him. Maybe we should go check out what Bigums is spewing about. I mean, I know exactly what it is. The ISDA. It's all in the swaps. It's all in the swaps. You can't see what's going on in the swaps. Well, then how in the fuck do you see it? So you're going to sit there and say, trust me, bro. It's all in the swaps. But you can't see it. Fucking Muppet. Absolute Muppet. And he sounds like a Muppet, too.
For banks, Fed now, so banks can instantaneously send money to each other in seconds.
Yeah, phase 6.
And this is all happening all around the same time.
Phase 6, my fucking ass.
Story, I think, of what we've been talking about for a very long time, guys. So, again, I really think we're at the home stretch here for the MOAS. I really do.
Oh, yeah.
I think
he has so much, excuse me. Look at that. He has so much conviction that he can look right at the camera and say that.
Guys. So,
look at this.
I really think we're at the home stretch here for the MOAS. I really do. But I think that...
Yeah, because whenever anybody says something like that and they are looking away, looking around everywhere but at the camera. Boy, that really instills confidence to me. I mean, these guys watch their videos before they upload them? And what the fuck? What the fuck, bro? Jesus Christ. And I'm not a huge believer in the whole body language thing. I mean, there's some truth to some of it, but there's also a good bit of pseudoscience that's employed in these things. And, you can't tell from somebody's reaction, for example, you know, um, after somebody dies, and everybody has different reactions to different events and things like that. I understand that. But we're talking about, you're telling me that I'm going to have life-changing wealth. And you've been telling me that for a year. And you're telling me that, oh, we're in the home stretch and you can't even look me in the fucking eye. That is a weak fucking man, person. That is weak. Weak fucking sauce. And, they all do it. Reminded of Wrench Capital when he, famously went on vacation when the stock was crashing last year and had the fucking balls to go on from a resort in Miami and come on and say, "Oh, guys, well, go spend some money on yourself. Go spend some money on treat yourself to something." You can't treat yourself to something if you've lost 70% of what's in your goddamn portfolio because you listened to a fucking grifter who now, by the way, gaslights you and says, "Oh, I've never the moon boy, the AMC moon boy." I mean, this thing is so out of control, so fucking out of control. I can't even express it. Thoughts on Tony DeNaro? I'll come back to that, okay? Let's finish this.
These things are beginning to occur. And I think that,
beginning to occur?
Company like AMC, in my opinion.
Would you forget about the last year?
I think that an event like this is a catalyst to make things happen. But I also think that, AMC does have a pull on systematic failure, right? Vaporizing hedge funds on Wall Street. I think that, this yes vote really put a damper on maybe some of the plans that they had over there on Wall Street. And it's kind of funny how after the yes vote, things start to, the dominoes start to fall. So that's the video, guys. Just kind of my thoughts.
Yeah, if you're a conspiratorial retard, I guess. But it's not really. Lynn leaned over a railing and last earbud fell into a tangle of vines. God. Well, I don't know what kind of earbuds you have, but I got my earbuds at Menards for $15. And I said the secret word. Well, what is the secret word? Is the secret word in the title of the stream? Because I already used it twice. But yeah. Zero thoughts from Model 3 dude on Tony. Charlotte remembers when Common Sense said, "Do you know who the fuck this guy is?" He never said. He never said. Let's shift gears to oh crap. There it is.
Let me give you an example.
Okay, so 6 days ago is his last video, and it looks like we already looked at it. So, momentum slowing down on the MMTLP MMTLP grift. I don't know. We'll see. John Berta. MMTLP versus FINRA saga. FINRA and Congress meeting update. Will Congress allow John Berta to attend? 5 days ago. Wow. So there's not much out here recently. Not much out here recently. Oh, look. Let it trade. Let it trade. Yeah, right. So the Vineyards asked about Tony DeNaro. So a lot of what Tony DiNardo seems to talk about is stuff that we talk about first, and then it mysteriously pops up on his streams. So, for example, yesterday, he's got here late night stock chat with Tony D and Massalorian, who's another absolute winner. Wrench Capital, Ant Trades, and AMC Postcards. Well, we spent a considerable amount of time in our stream yesterday talking about Wrench Capital, Ants Trades, and the AMC Postcard retardation. Now, I have no interest in actually looking at this stream to see what he's saying, but he purports to be the gatekeeper, the evidence-based guy. That which is hilarious. I'm just saying, that's all I'm saying here. That, and I have no proof other than it just seems odd to me, and that should be enough for the apes. Seeming odd, that's enough to, base an investment on. The birthday catalyst. Talking about macroeconomics. I mean, we understand. We talked about short volume. 2 years ago, we've been talking about how people don't understand short volume, FTDs, all of these things. If he's watching, make a vid about chickens and coops. You know that there's a channel. There is a channel for that. I forget what it's called. Premier Coops or something like that. Something generic. Charlotte subscribed to him over a year ago. Kind of turned me off on some of his comments. Yeah, I could see that. I could see that. So he and Massalorian are best buds. Massalorian's like his protege, whatever. I mean, these guys are such like junior high school girls, in my humble opinion. Passed the security industry essentials exam. Look, he's going to become a financial advisor. FUD busters. But the fact remains that this channel, my channel, has always been here with the intent of looking at the evidence and cutting through the nonsense, cutting through the bullshit, rumors, and unsubstantiated claims. I was doing that in 2021, July, August, when people like Tony DiNardo were caught up in the hype. They were caught up in the hype. He was caught up in the hype, absolutely was. And then gradually, of course, he understands. He fucking understands. He knows. Oh, look, on balance volume. Look at that right there. I've been harping on that for 2 years too. Now, maybe it's not because of me, maybe it is. Also, Tony and I have had our run-ins together. And sometimes he was friendly here. We would come in to chat during the streams and chat. Sometimes he was a dick. Then there was the whole Darth Vader thing when he literally compared me to Darth Vader and said that we're one of the biggest AMC bear channels, and that we hate AMC and that we bash the stock and all of that. I could give a fuck about AMC stock. What I care about is misinformation. What I care about is people being honest and being held with their feet to the fire when they're not honest. That's not, being a bear channel. That's not being a Darth Vader, party pooper. That's being a fucking man. It's being realistic. It's being honest. Quite frankly, it's being honest. So, at the end of the day, I'm not a fan. Plain and simple. Sorry, not a fan. And I'm sure he would say the same thing about us, even though I really would be willing to bet if there's a way we could know, which we can't, but if there is a way we could know, I'd be willing to bet that at least some of the ideas that he gets, he heard here. I'll stand by that. Tony is a coward that lurks here, then opens his channel stream and he kicks anyone that may challenge him. That's true too. That's true too. You know, and it's true that we've kicked and muted our fair share of people here, but you know, my thing is this: if people are going to come in here and want to engage in an adult, you know, rational way, we're all for that. But people that come in here and say to the moon and put rocket emojis and all that kind of shit, there's dozens of other channels where you can do that. Dozens of other channels where you will get praised, people will love you, you will be popular, you will be accepted, but that's not here. Like that stuff, that's like gaga goo goo as far as we're concerned. You know, I don't have time. I don't have time for baby talk, quite frankly. Yeah, we know that you think that's going to happen. Listen, just actually for once in your life, shut the fuck up and listen as we try to explain to you why it's not. And we know that you disagree, but how could you really disagree if you haven't considered these factors? That's not an honest disagreement. It's a knee-jerk reaction because you have an extreme bias that you literally can't get rid of because you're losing your ass in the process in terms of your account. So anyway, Lynn, yeah, she kicked at least 2 dozen people, which which is like I'm hands off on that. These guys can do whatever the fuck they want. Kick anybody, don't kick them. I don't care. I may kick them, or I may say, hey, let them be. But at the end of the day, I don't want to micromanage that aspect. Having his sidekick in the background going to the bathroom every 3 minutes to do coke is disappointing. Oh, wow. Really? Really? I didn't notice that. Maybe I haven't even watched enough. Maybe I haven't even watched 3 minutes of them lately to even see that. It's probably true. I haven't watched 3 minutes. 2 dozen hundred. TMI waiting for Rockets Diamond Hands. Ape Father is showing off his burgers for National Burger Day. Oh my God. Oh my God. Hey Chuck, what's up? Off subject, but I found deal of a lifetime for you guys. Review Dorks and STV Discord. You can now buy a lifetime membership for a low price of $1,348. Are you kidding me? Oh my God. $1,348. That's cute. That is cute. You know what? What's going on with Chart the VIX? Jesus, this weenie. Model 3, dude, this is a weenie right here. It's what we call a weenie. Or a goon. He's a goon. Dave Letterman would call him a goon. AMC. Life-changing money. Life-changing wealth. Look at this, all this default fucking. Tell him to hit like. Yeah, everybody should do that, actually. Trading Psychology Masterclass. Look at this master. He's a master now. Fucking masterclass. Jesus fucking Christ. I mean, he's always been a narcissist. Holy shit. The secret to becoming profitable is paying $1,348 to me because I don't need the $1,348, but, this is valuable information. If you were such a master trader, why do you need $1,348 from your poor fucking sap subscribers. It makes no sense to me. Jesus. I can't. This guy and I have ripped this fucker to shreds so many times. It's not even funny. Not even funny. All right, friends. All right, friends. Welcome.
Hey friends, welcome to Stocks and Crypto Plays. I'm talking about AMC stock and a call to action. Why? There's some big news right now. I'm actually going to call it breaking news, and often breaking news.
Whoa! Whoa! Did I hear breaking news? You know what that means. Breaking news. I don't know what the breaking news is. Not sure. But Stocks and Crypto Creep has some breaking news for us. Let's see what it is.
And I know it's a holiday weekend. I hope you're having a nice time enjoying, relaxing, getting some sun, doing some cookouts, having a nice time with friends and family, okay? But many of you like to watch YouTube when you're relaxing. So here you go. Breaking news. Bill Plute. He owns Plute Homes. He's a philanthropist now, an amazing man, very wealthy. He's worth hundreds of millions of dollars. And he gives away on Twitter to people in need. He'll send them money right to their Cash App. I've seen this man pay people's bills for years, many years. I've seen it firsthand.
What?
He'll even post the proof. He'll send his Cash App to them.
Boy, I'm not skeptical at all. Who is this mystery financier? What the fuck am I watching?
He'll pay their bills, people that are suffering, that need money to pay groceries or gas or...
Are you suffering? Are you unable to pay your bills? You must be an ape. Well, go see Pulte. He'll pay your bills. What the fuck?
To have dinner. This man is amazing. If there was other people like him, more people like him on Earth, Earth would be a much nicer place. Now, having said that, the reason I'm so excited is because he put out this tweet today, 3 hours ago. He said, I've been hearing from a lot of AMC shareholders. What do you think about the CEO and his actions? Please educate me on your thoughts. This is your chance now. Go to Twitter, comment below. What do you think about all this? Now, the reason it's important, friends, and it's a call to action is because Twitter is a hostile environment for us. Why?
What the fuck?
It's full of
I am so fucking confused.
People are brainwashed. They don't understand the stock market. They don't understand how devastating a reverse split is. They don't understand.
What am I listening to? I'm going to pretend like I didn't hear what I just heard, even though I did. And I threw up a little bit in my mouth. Oh my God. What the fucking shit? Side note. Apparently, this is what narcissistic personality disorder looks like. Okay, here's Pulte. I'm looking at Pulte here. Oh, come on. Pulte family. Okay. Pulte family sues Pulte Group COO Brandon Jones. What the fuck? Well, here's the Twitter. Inventor of Twitter philanthropy. Pulte Group has fired a second executive. She was the highly paid senior vice president of HR. Disclosure, I am no longer in a supervisory capacity over management at Pulte Group and am no longer with Pulte Groups. Some confusing ass shit. Thank you all for the birthday wishes. 35 years. This guy's 35. I don't know what I'm looking at. God damn it. What is his name? What's his name even? "19-year-old's funeral." He's crowdfunding that. Does anybody know who this is? Pulte Group. I mean, if anything, he's a second or third generation guy. Like this guy didn't do shit. I mean, prove. I want somebody to, well, he does stuff, and it looks like he does stuff here in my area. Home construction. Yeah, Bill Pulte in 1950. So he's a silver spooner. I'm going to go out on a limb and say he's a silver spooner. Great. Should be selling Fish-O-Magic. Son of a real estate investor. There you go. There you go. I could count on Manuel to cut through the grease and just say it as it is. Yeah, son of a real estate investor. One of my favorite types of people in the world. Let me tell you, maybe AI made him up. Okay, well, apparently stock and crypto creep has a crush on him.
And that a reverse split is a theft campaign. These people on Twitter are saying, yeah, take 90% of my shares. It's fine. They're brainwashed. So you need to get to Mr. Plute here and let him know how you feel about the reverse split. How do you feel about...
I mean, who's the brainwashed one? I mean, seriously. And by the way, let me zoom in. Let me zoom in to make it clear, make my point clear. That says Pulte. The U is before the L. So in no universe is that word pronounced Plute. There is no possible world where that fucking word is pronounced Plute. Okay? Jesus Christ. I mean, I would rather be brainwashed than fucking brain dead. That's all I'm gonna say. Motherfucker.
Adam Aaron, it says right here, what do you think about the CEO and his action? He's asking you, now's your chance to tell him how you feel. And it's very important because he's a powerful...
He kind of looks like Strongman.
And
Chris Bell. Doesn't he a little bit?
Just to have him put it like this is amazing because most of the powerful people...
Oh, a GME investor.
They don't want to even hear a voice from...
Powerful.
So...
Son of a real estate investor. Well, such a powerful man. But he's a GameStop investor? That's hilarious. That's fucking hilarious.
I looked through the comments and there's a lot of just like people saying, yeah, we love Adam Aaron. I don't know if those are paid shills or bots or what.
No, they're not paid shills or bots.
Okay, now his Twitter is the @ and then...
They're just people that are brainwashed, you know? They're just people that are brainwashed the other way. They took the red pill.
PLUTE. You could see it right here on the screen. And you see me right there, Stocks and Crypto Plays, and I posted some of my videos for Mr. Plute to watch. I put the link, some of the important videos you could see. I said, please watch my YouTube channel, sir. We need your voice. Also, I put this video, AMC Emergency and Terra Capital Hostile Takeover of AMC. And if you yourself haven't seen these, just go into Twitter and click the...
Hostile takeover. Yep, another thing he does not know the definition of. Yes, the board and Antara Capital staged a hostile takeover because that's how hostile takeovers work.
So also hit like on those tweets.
What a joke.
So we could get more exposure. I don't really care about likes on Twitter. It does nothing for me, but maybe if you hit like on there, Mr. Bill Plute will see that you're supporting what I'm saying. It's our team, friends. This is our team. So
it's your cult. You mean it's your cult.
Let's work together. So here's another video I posted below for him. I said the AMC vote was rigged. We won. Proof is here. AMC. Feel free to hit like on that. And I only say hit like on that because it will show Mr. Bill Plute that, oh, people agree on this. You know, I don't get any type of benefit from likes on Twitter. You know, I'm a YouTube guy. So, by the way.
Yeah, a YouTube guy. Okay. Chuck, they don't get how a split works. Last time I checked, $10 bills, the same value as 10 $1 bills. And missing something, I don't get their outrage. Their equity stays. I mean, that's exactly what we've been saying. But these people like this clown, Frankie Muhammad, Mike, Professor Mike, the Marine, you know, these guys, these clowns, Muppets, they're the ones pushing this narrative of stealing 90% of your shares, theft. I mean, it makes no sense. I don't know how in the fuck anybody can actually believe this shit. But this is a prime example of the dangers of buying into a cult, the dangers of confirmation bias and writing off possibilities that you've never even considered, that you don't even know about probably. I mean, it really is a cautionary tale. It is the cautionary tale of this era, as far as I'm concerned. And the other hammer, the other shoe, you know, I mean, you could say it's already dropped, but they don't believe that it's dropped. I don't know what the, you know, point of no return or the point of realization is, but I mean, yeah, spot on, my friend.
Wait, please hit like on this video. Please hit subscribe, add notifications, comment below. You guys are just so great. I mean, I love interacting with you guys. I love reading your tweets. Or your comments. I know I don't reply to all of them, but I read them and I enjoy them. So let's see what else it says. Okay, so you can see here live. It says, I'm a pro AMC, suggested C-Payne to give CEO Adam airtime and ask the following. FTDs, why PPS at $5 for months? Why not buy back at these prices and show confidence? What happened to Pounce or Checkmate? Why was he
buy back?
Those are some questions.
With what fucking money? How are you going to do buybacks? You like this is the shit. Okay, this person here, I'm sorry, but yeah, you have an opinion. It's a shitty one. FTDs, you don't understand. Why price per share at $5 per month? Because the fucking volume has been anemic. Why not buy back at these prices and show confidence? Motherfucker, they're trying to fucking raise money. How are they going to do a fucking buyback when their cash on hand is declining by hundreds of billions of fucking dollars per quarter? I mean, give me a fucking break. This is like just so childish. Why, like, how? This is the problem with social media and the democratization of finance. Complete idiots get as much airtime as everybody else. They get more views and popularity than people actually are actually asking the right questions and actually make sense. That person is a fucking brain dead Muppet. If you're sitting there wondering why AMC is not buying back their own shares at these prices, you're a fucking retard. Okay, I'm just going to say it. You don't get it. You don't get it. You need to go back to fucking square one. You have no business. Honestly, quite frankly, you have no business gambling on these speculative stocks, and you certainly have no business trying to influence anyone else. It's completely inappropriate. Completely inappropriate. That is retarded as fuck.
This person has. There's some yes boys right there. I got into AMC to save the movies. I love the movies. A lot of people don't like how Adam Aron has handled his business. They have a lot of debt to pay off, and they need to raise money to pay it off. I like it long term. So what the people...
Right. They need raise money to pay it off. So why don't they do buybacks at these prices? Are you fucking kidding me? Go eat a fucking dick.
What I don't understand is, yeah, we have $5 billion of AMC debt, but how does he want to pay it off? He wants to take it out of your account and my account. We saved AMC. Now he wants to take.
No. Literally $0 are coming out of your fucking account. Mr. Magoo, what are you talking about? See, again, no business trying to influence people when you don't understand these fucking basics. This is what is so frustrating. Months later, they still don't fucking understand. They have no intention of understanding. I mean, this is absolute fucking garbage. Listen to this.
We have $5 billion of AMC debt, but how does he want to pay it off? He wants to take it out of your account and my account. We saved AMC. Now he wants to take 90% of our shares and take it from us and pay AMC bills with our...
What?
I'm not happy about that. I don't like that. My money is for my...
Yeah, because you're fucking misinformed. You're uninformed. You are the definition, the fucking poster child of uninformed retail investor. This is it right here. This is the poster child for an uninformed retail investor. Sadly. You know, and we're all brothers and sisters in Christ, right? Huh. I threw up a little bit in my mouth there. And I got nothing against anybody personally, right? I don't know this guy from Adam. Aaron. I don't know him from Adam Aaron. But when it comes to this, respectfully, you have no business talking about finance in front of any type of audience, unless it is a fucking mentally retarded audience. Wait a minute. Okay, let me rephrase that. You have no business trying to influence people who aren't able to ask the right questions and be critical of what you're saying, which is your audience. This is actually absurd. He's claiming that they're taking 90% of shares from people and using that money, quote unquote, to pay off the debt. First of all, see if the market cap fucking changes the day before the split, the day after the reverse split. See if it changes. Number two, see if the amount of debt changes from one to the next. Okay? From one quarter to the next quarter, before and after the reverse split. See how much the fucking debt goes down. But why don't they do share buybacks?
My family. It's not for Adam Aaron to pay AMC bills with. And by the way, Adam Aaron is paid hundreds of millions of dollars a year to do nothing, to go around and watch movies and get photos taken with people. Okay? So back to this. Here's a yes girl right here saying Adam Aaron's a genius. He met with shareholders and answered all questions. Yeah, right. That's a lie. I was on the call. He didn't answer all questions. He didn't answer any questions. What did he answer? None. I was on the live call, both of them. Okay, Adam Aaron's the go.
So that is the spectrum right there. That's the dichotomy you've got. You've got people who say that Adam Aaron is a genius and he met with shareholders and he met with several shareholders and answered all questions he was able to legally. Obviously, she's not talking about the earnings call. It says he has met with several shareholders and answered questions. Okay, so you weren't on those calls because she's talking about meetings. Okay, first of all, this clown can't even read. So that I'm going to trust him. But that's the dichotomy. You have people who literally think that he's a savior and that he did answer every question. And then you have clowns like this, Magoo, who thinks that Adam Aaron is a scammer, a criminal, and didn't answer any questions. That's the spread you've got here. How do we arbitrage this? I don't know.
Goat, there's a yes boy for Adam Aaron.
And like this yes boy, yes girl, the yes people, the no people. We had a cult for a long time. This has been a cult. But now this is moving into a different stage of cult where we have splinter groups. We have the original cult, but we have the yes people. They're one faction. Then now we have the no faction. And what happens? What happens when you get factionalization like this? Well, it's destabilizing to the whole thing. It's destabilizing to the whole organization, the whole cult. Anyway, continuing. I got to shut up. My voice is starting to go out.
Anytime you'd like to discuss it in Space Call, I'm down. You'll probably have 10x your already massive fortune if you invested over the next 1 to 5 years. Another yes boy here says,
yeah. So it was a yes boy, but he said, he said you're going to make money if you invest in AMC. So, I mean, it's just ridiculous. It's ridiculous. I mean, you could tell that the wheels were trying to spin up here. He was trying to refute it, but he couldn't do it, so he just moved on. What a pussy.
Genuine quality, committed to honesty, transparency, fairness. Wow. That person is clueless. They have no idea what's really going on. And here's another person that was brainwashed. Let's not spread FUD. The AMC bashers have been targeting at CEO Adam for over a year. 87% want to convert and reverse split. See how brainwashed that person is? That person, whoever they are, they really think 87% of the people want to convert and do a reverse split. Why? Because Adam Aaron brainwashed them. He did tweets and he said 87% of the people voted yes. I proved to you they didn't. I proved to you Antara, Vanguard, BlackRock, Citadel, these companies voted yes with millions of shares. The retail holders didn't vote yes. You know who voted no? The retail holders. 50 million shares voted no from retail holders. The yes votes were from institutions, powerful elite institutions. I proved it literally in the paperwork from Antara. They have to vote yes. It was in a closing contingency.
And that was
agreement with AMC.
And that was retroactive DD that he did, because we knew that when the fucking paperwork came out last year. We did. We talked about it. We said this vote is going to be yes. It's not even why even have a vote, and we're not even going to worry about it. We know it's going to be yes. So congratulations, late to the party, but you proved it. Yeah, sure, you proved it. I mean, add a healthy dash of narcissism, and you just got a total piece of shit right here. Total fucking piece of shit.
In their SEC documents,
I'm going to let him continue to bloviate.
People like this on Twitter have no idea what's going on. They just listen to what Adam Aaron tweets and they regurgitate it. So let's get over there, friends. Let's tell the truth to Mr. Bill Plute so he knows what's going on. A lot of yes boys on there. A lot of AMC people that have their noses in Adam Aaron's back end. And a lot of these might be bots because you can't trust Twitter. It's full of bots.
Okay, Elon. Okay, Elon. Let me guess. You appreciate the free speech now. Garbage.
Here's one person that's not controlled by Adam Aaron. It says, I see a lot of people into that stock, but honestly, I don't think Adam Aaron is doing anything good for the company. All smoke and mirrors with him calling people apes, unprofessional ways to communicate with shareholders, etc. Plus diluting. There's a smart person right there.
Oh, yeah. There's a smart person. Yep.
Go ahead. Go to Twitter.
No. I mean, I can't even. I mean, these people, this is bottom of the barrel. The bottom of the barrel.
Here it is.
And we have to do another tier listing. We have to do another tier list for these grifters, because I realized yesterday that most of the ones from our original tier list are not even around anymore. So we need to update that. Well, we'll just do a new tier list with the remaining grifters. But we, Magoo, Scavenger, Ants Trades, some of the other new assholes on here. And it's, essentially 2 years since it's a 2-year anniversary of the MOAS in June 2021. So last year, actually, it was literally exactly 1 year ago, May 28th, 2022, was when we did our first tier list. It was a 2-stream tier list ranking. So look for that coming up. May even do it tomorrow, since we're off work tomorrow. But anyway. you can bet that this guy is going to have occupy a hallowed place in that list.
Mr. Bill Plute at PLUT.
Pulte.
Multi-millionaire guy, philanthropist, owns Plute Homes. Have you heard of Plute Homes?
No, he doesn't. It said, he literally said on his Twitter that he's no longer fucking associated with Pulte Group. Like, what are you talking about? You don't even know. You're just talking about hearsay that you think that you heard when you could literally go look it up and prove your fucking self wrong. See, like, literally everything these clowns do is laughable. What a joke. I mean, I'm sorry. I really hate to say this, but this guy's a fucking loser. This guy does not do his homework. He doesn't even read the fucking questions on the homework. He just bloviates.
Beautiful homes. And he's a good man, a great man that gives to people, and he's asking your opinion.
He's a very good man.
Share your opinion.
We love him.
How do you feel about the reverse split? Let him know.
Okay, yeah, I got it. I get it. Fuck me. Ah, fucking hell. All right, let's go back to the futures and see what this, from one garbage dump to another. What do we got here? One garbage dump to another. Now, we probably do, there probably is low volume because of, the holiday. So the market will close tomorrow at some point and then reopen tomorrow evening. But just to run through here, the S&P's up about 0.4%, and NASDAQ's up about 0.7%. I mean, surprise, surprise, surprise. Garbage fucking market. This market is ridiculous. It makes no sense. It's designed to grab money. It's designed to be confusing. It's designed to fucking fool people, trick them into buying in at the top, which a lot of people sadly are going to do, and they're going to get fucking crushed. But, where I'm sitting, it's just like, get the fuck on with it. I'm so sick of this fucking scam, which is why I'm out of the market right now. The Dow's up 0.3. Oil's up 0.8. Natural gas is up 0.8. Gasoline's up 0.3. The VIX is down 2.5%. I mean, God, fucking. And bonds are about flat. So, I mean, I swear to God, if we have another fucking garbage week of garbage rally, you will know that this fucking thing is a scam, a total fucking scam. And I say it is anyway. I mean, this is the delusion of the United States right here. I hate to say it. No, I don't. Fuck it. This is the delusion that we live under. I mean, and you wonder why, I've said this before, I'll say it again. You wonder why some people wonder why our society is unraveling at the seams, seemingly. Now, people probably have said this always. Oh, everything, doomsday, everything's, the sky is falling. I'm not saying the sky is falling. I'm saying that our society is garbage. I'm saying that if you look at the fundamentals, if you look at the fundamental basis for our monetary system, it is a house of cards. It is an absolute house of cards. Anyway, do I like Boss Blunts? Is that a joke? Is is that a joke? I mean, I'm not trying to be an asshole here, but you've watched a fair bit of this stream. I'm assuming you're familiar with Boss Blunts. You should be able to answer that question. It is heading in the wrong direction. Heading in the wrong direction. I know you're new, and I appreciate you being here. But I guess I thought it was a little bit more, I don't want to say obvious, and those people that are not new here will understand why. But yeah, I just thought that it might be Although I suppose, I guess we are talking about some macro stuff, and I'm talking about how the whole system is garbage. So that is a Boss Blunt's talking point. But no, you're not ever going to hear me say we're going to be so fucking rich. You're never going to hear me say that unless I'm making fun of it. No, he's a fool. He's a complete fool. All right. What else we got here? Well, speaking of fools, let's go. Well, you know what? Let's go with Lou. Here's the honest truth from Benji. Right. Okay. Sure.
What's going on, everybody? All right, I'm just
Truth from the stairwell from Lou with love.
trying to get some trying to get some sun on my precious toes there. But I was also thinking about this whole AMC settlement stuff because we're entering the month of June, a couple of hours from now, and that's when the whole court case has to wrap up and be done. And I'm thinking we're gonna get fucked up if we get close to that settlement. So I'm just this time now just trying to think in my head, like, you know, the stocks that I have in AMC right now, I'm like, okay, that could have a bump up, and I'm thinking we're gonna have to have a run because it's just a numbers game of how everything is running now. Shares available, you know, as far as FTDs, just the liquidity issue, like we're right there in that point. So I'm looking for my run. But at the same time, I'm also looking on making money. So AMC might be over this month if the judge wraps everything up, the vice chancellor. I think people need to start thinking about our plans going forward. The market is unlike anything I've ever seen before. When something becomes a major squeeze, there's a reverse split, a surprise reverse split. There's things that you just see along the way that just make no sense. Stocks that are supposed to go up, go down. Even
supposed to?
Good news. Then out of nowhere.
Right, Model 3 dude.
Nobody ever heard about it. Like Changxi Corp, whatever, out of whatever, you know, lunar region of China, and all of a sudden that runs, and they allow it to run. So you can post in the comments and think about what's going to be. Are we going to get a run, or we're going to have to settle for a settlement? Put the comments down.
A run or a settlement? I don't know. Time will tell on any stock. I mean, okay, sure. I said this. I mean, and it sounds like I'm being, full of myself. And I realize I didn't switch the thing there, but let me right in here. Let's see, right in here is where I started my channel. Oops. Right here, right in this region. Okay. And, like I said, it's always been based on what does the evidence show? Oh, you are pumping an FTD catalyst. All right, let's look at FTDs and actually talk about what it is and see if it actually is. Or you're talking about, short volume, or you're talking about this aspect or that aspect or whatever it is. So that's what it always was. And as a result of all of that, yeah, it is basically nonsense. Because also, here, this is when people like Trey and Short the VIX and TMI and all of them, they sold. They sold, they profited, they took profits, yet they kept pumping it. they kept pumping the stock and giving these garbage catalysts that were fake and were not based on reality or any evidence. I mean, you don't need time in order to do research and actually learn stuff instead of listening to hearsay and rumors. Okay. So here it is. And, the conclusion was, yeah, this is basically a scam. This is nonsense. Every one of the catalysts is fake, and I can show you with evidence and support and citations and sources why. Right? And warned people that this would happen. Now, keep in mind also that this is before, the split, the ape split thing happened back here. So this was a $72 moment. So we're not that far off of that here, but of course it's only like 40 something because it was showing us the chart after ape. Right. So, and from that point where I started my channel, I'm just going to take a rough, midpoint. The stock's down 80%. 80 fucking percent. I mean, that's not a coincidence. That's not luck. That's looking at the evidence, making a rational decision, critically thinking about it, not being swayed by rumors or the idiots who, this period right here, I'll tell you right now, this period right here, when AMC went from, what was it? Like on this chart, at least, it was 18. I mean, we're going to have to do percentage. When it went up from this local low to this local high, about 80%. Okay. You can imagine the hate that I was getting here. Everybody calling me an idiot, calling me a shill, calling me this, calling me that, because I was wrong, because AMC was going back to all-time highs. Well, guess what? Nope. Guess what here? Nope. Guess what here? Nope. 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 So, I mean, yeah, I guess time will tell, but I mean, I don't need time to tell you what has happened here, what will continue to happen here. It's not that hard. It's not that hard. You just have to let go of a bias. Let's see here. But Charlotte, the thing is, and you know this, I'm not telling you anything you don't know. Failing, losing, is essential to succeeding. So are you likely to fall for something like this again? Now, I question whether, this will happen. This kind of thing would even happen again. It's a complete aberration that came about because of the pandemic and the ridiculous Federal Reserve response. And really, all of that, in my opinion, was a massive transfer of wealth to, the fuckers who absolutely did not need the transfer of wealth. Yeah, they gave people stimulus money, but where did that stimulus money end up going back to? Let's be honest about it. Where did the stimulus money go back to? It went back to corporations. It went back to the people in the, top half of the top 1%. It's a transfer of wealth. It's a massive scam sold as, oh, we're taking care of the people. Not just kidding. Now you get 10% inflation and 5% inflation that sticks around for 5 years. What happens next? Goes to zero, shorts win. I mean, that's the thing. You have to get away from this binary outcome way of thinking, right? It's not going to the moon and it's not going to zero. Now, what happens next? I don't know, but it's not going to the moon and it's not going to zero. And that's basically what I've been saying this whole time. You're not going to all-time highs and you're not going to zero because shorts don't make companies go to zero, first of all. Shorts cannot make a company go to zero. Doesn't work like that. It's not how it works. So stop saying that. Number two, it's not going to the moon. Why do I know it's not going to the moon? Well, because the only reason it went to 72, again, was because we added $7 trillion of money to the money supply. We added $7 trillion to the money supply. And we know that inflation is a monetary phenomenon. This is Milton Friedman, 101. If you increase the supply of something, what are you going to do to it? So that's what we've had. If you increase the supply of money, you're going to decrease the value of it. So it's going to require more to buy the things that didn't require as much before. So we're under a period of monetary stress, sticky inflation, which we didn't have in 2021 yet. We were laying the groundwork for it, absolutely, but we didn't have it yet. So we're not in that environment. So it didn't happen when we were in that environment. So logically, will it happen now that we're not in the environment? I mean, I think the answer there is no, it won't. Let's see. Charlotte says, I was told by a friend that AMC is a downtrend, so not a good stock a year ago. I mean, yeah. I mean, how is that so hard for people to understand and believe? Well, because they don't want to believe it. And as humans, like I was saying, relative to our ridiculous system here, we can convince ourselves, people can convince themselves of anything that they want. Our brains are masterful at rationalizing things, or at least thinking that we're rationalizing them. But, you know, reality sets in. AMC is not going to zero. Company can do reverse split like Mullen. True. Then it's an average stock. Basically, yes, it's an average stock. Why people believe $1,000 or more is dumb. AMC is mooning. It's mooning its investors with its big hairy ass. AMC is mooning its investors with its big hairy ass. With Adam Aron's big hairy ass, it's impossible to be in the market and not fail, learn from it, move on. Chuck, that is spot on, my friend. I mean, that's one of the major things that I've tried to get across is, you know, the apes, they don't want to admit that they were wrong, and that's the worst possible thing that they could do. It's the worst possible thing. I mean, yeah, it sucks, but the bigger the opportunity, the bigger the problem, the bigger the opportunity. And I've said this. The apes have in front of them one of the most massive opportunities that they will ever have. I mean, the other way to say that is they fucked up bad. They're screwed. Or you could look at it in a positive way. You got an amazing opportunity to learn there. Bigger the problem, the bigger the opportunity. So use that as a learning example, not only of what not to do, but what to do. And I'm not here to save anybody. I could honestly care less what happens to any individual's brokerage account. You know, I'm not a I hold for you, you hold for me believer. Your account has nothing to do with mine, and I don't care. The goal is to make money, and there's practically an infinite number of ways to do that. But nonetheless, there are, I mean, how do you learn? How does one learn anything, get better at anything? Well, I mean, in my mind, the way I've been able to do that, and not only in the market, but in other things, many things in my life, is by finding people who were genuinely good at things, who were better at them than I was, and trying to be around them, trying to soak it up, trying to understand and learn from somebody who knows what they're doing, asking questions, trying it, screwing up, asking more questions, trying again, screwing up again, you know, try again, fail again, try, what is it? Oh, shit, I got to get the quote. I got to get the quote. I'll get it. I think it's well, anyway, I'll find it. There's a relevant quote. It's a quote by Samuel Beckett. Try again, fail again. Oh, what is it? Ever tried, ever failed, no matter. Try again, fail better. Samuel Beckett. So, from Worstward Ho, 1983. Ever tried, ever failed, no matter. Try again, fail better. So, fail better than before. Fractional improvement. Try not, do or do not. There is no try. Another way to say it. Another way to say it. I would just caution, there's a difference between being, scared and being foolish. So scared money makes no money, but foolish and indiscriminate money also makes no money. And that's where the apes are. They're not scared. They were foolish. They didn't do their DD. They didn't do their homework. They trusted people that they shouldn't have trusted. They trusted people who were telling them things they wanted to hear. It's a classic case. It is a classic case of confirmation bias, manipulation by the grifters, the influencers, pump and dump, Wall Street latching onto a narrative. I mean, it's a perfect storm for these people to get absolutely crushed. Perfect storm. And the number one rule of thumb in market matters and investing is one thing and one thing only. And I'm going to type it out here. It's so important. I'm going to type it and put it on screen. Only invest as much money as you can afford to lose. And if that's the case, then you could be like me and be having taken massive losses the last couple weeks, and I don't really care. It doesn't really bother me. I fucked up. I know that. But it doesn't really bother me because my account started out with a certain amount of money. And it ebbed and flowed. Now it is, it's at a flow point. I think the flow is the low point anyway, but it's at a low point. And I don't really care because I haven't put anything into it that I can't afford to lose. So it's not like it's affecting me. Yes, it's affecting me because I want to do better, but it's not impacting me. It's not making an impact on my life. It's not disallowing me from paying things I need to pay, taking care of obligations that I have to take care of. It's not making me, lose sleep or go, engage in self-harm or anything like that. It just doesn't matter. But the apes overinvested because they were told and they believed, and it was a mania. And what happens with manias? Just like every mania that happens, going all the way back to the tulip mania. And now we're in AI mania, which is the new tulip mania. They collapse. They collapse. So Just made a $5 deposit to what Webull, all fair on Wall Street. Ken Griffin, thanks you, Lynn. Mass psychosis. I'm planning on going, Peter, I'm planning on going into bond ETFs when the rates go back down and playing the swing trade, obviously, with what can afford to lose. Sure, yeah. I mean, that's nothing wrong with that. I just say, I don't think that that's going to happen anytime soon. And I'm not saying that you're implying that, but I mean, I think we still got a couple 100 basis points to go before we really get a handle on inflation. That's going to kill the tech rally of valuations. It's going to absolutely crush it. Once the equities market catches up with the bond market, it's game over. The thing is, like you were saying, people had a ton of money to lose in 2021. If you add all the stimulus checks as a single dad, 3 kids, it was over 10K, which is nuts, right? And the thinking was, well, let me invest that, money into myself for the future. And that's what I mean. All of that stimulus money went straight back to Wall Street. It's crazy. I mean, it went to one form or another. And in their mind, they could afford to lose it because it's money that they didn't have in the first place. But I mean, the thing is, like, you could have been doing the opportunity cost that was squandered is massive. The opportunity cost, it's incalculable. What could have been done with that capital, even if you just kept it in US dollars, and then in 2022 put it into, short, medium term treasuries and earned 3, 4, 5%. But they put it into a bubble. It's wild. It blows my mind. And it can only be attributed to lack of experience, lack of critical thinking, lack of, having screwed up before. I mean, imagine the narcissism, imagine the egotism, imagine the sense of entitlement that you must have to join any field for the first time and think that you are the fucking shit and that you are going to crush the biggest, most powerful institutional players that you got. I mean, that is really what is the most absurd here. Like, I have never, let's see, what have I never done? I've never done a lot of things. What have I never done that would be, comparable? I've never played craps. Okay. I've never played craps. It's interesting and fascinating, and I've read about it and watched some videos, and I want to go to a casino and observe craps sometime, but I've never actually played craps, and I would struggle to remember all the rules and the side bets and all that stuff. But let's just say I'm inexperienced with craps. Okay. Does it make sense for me to go to the casino, sit down at a craps table, and go all in on one bet? That's what happened here. Now, there are people at that table, there are people at other tables nearby, just like there are people in AMC stock and people in other stocks at the same time in the market who exercised judgment, they had experience, they played maybe even at the same table. Maybe they were even investors in AMC. We have some of them right here in this channel, right here in this chat, even, who did play AMC and they made money. They got out and they knew when to take their profits. Just like there are people at the same craps table who know what they're doing and they walked away from that table with money in their pocket. Profit. So how can I, the inexperienced newbie, sit there and blame the dealer, blame the casino, blame the other players, blame everybody but myself, when the only person that I can blame really is myself? It is mass delusion. It is self-delusion. It is entitlement. and all of those things. But, you know, and I guarantee many of these people, if I told them that story, if I said, yep, you know, when I went and played craps and I lost $10,000 and oh my God, what a scam. They scammed me. You know, it's crime, all this stuff. Same thing the apes say. What would they say? What would people tell me? They'd say, Scott, what are you talking about? You didn't know what you were doing. You went in there and you lost your money. You fucked up. That's exactly what people would say, and they would be right. So how is this any different? Or if you've never played golf and you go and sign up for a golf tournament and expect your team to win, and you don't even know how to hold a golf club. I mean, the list of analogies goes on and on and on. This is basic humanity, basic adulting. And I don't know how people think that this is any different. My father was a PGA golf professional, so I grew up on the golf course. I know how to hold a golf club, by the way, but craps I do not know how to play. That is true. Let's see. Got to know when to hold them and when to fold them. Absolutely. Absolutely. No, I mean, I'm not saying that I am any type of golfer. I did hit some balls. I think it was in 2019. And I honestly, I was actually pretty pleased because I hadn't really held a golf club since I was, you know, a teenager and, you know, over 20 years ago. And so I think being older, a little bit more patient, um, did well for me, you know, a little bit more relaxed, a little bit more fluid, and you know, not trying to just get up there and smack the ball indiscriminately. So anyway, yeah, Model 3 dude. Next time I come out to San Diego, I'm bringing my clubs. Well, I guess I have to get some clubs first, and I have to come back to San Diego. But apes want to place blame should be the guys like Trey and the others that played them. Yes, but ultimately, you know what I'm going to say. Ultimately, it comes down to you have to be able to to evaluate this. You need to be able to like like the guys in like if you ever go to Paris or anywhere overseas, you know, tourist destinations, like you go to the Eiffel Tower, and there's probably some people here who've been there. You know that that's a massive uh, uh, area where scammers are, pickpockets, you know. Um, so if you're one of these people that is, willing to pull out your wallet or, give people, attention and sign a petition or whatever they're asking you to do in a foreign country, like, okay, well, what good does that do? I'm a foreign citizen. Like, I don't even live in this country. What are you going to do with my signature? But they wow you, they distract you. You have, but you can know this ahead of time and you can be on guard for it. You can watch Rick Steves and watch him talk about pickpockets and how you avoid it and what's the best place, where's the best place to carry your wallet and all of this stuff. And that's what the apes didn't do. They didn't watch Rick Steves before they went to Europe, which is a mistake. Always watch Rick Steves first. Okay. Surprised they haven't tried to bring class action lawsuits against the YouTube influencers for their losses. It costs money to do lawsuits, though. I don't think, and I don't even know if, a securities lawyer would even want to touch this kind of thing because I don't think they have much of a case. I mean, nobody had to listen to them. They're not financial advisors. Ultimately, they're not being paid to give their advice, so they don't have that same fiduciary duty. Now, whether they should or not is another question, But I mean, I have to agree though. I am sort of surprised, and there may have been some that we just haven't heard about. But the thing about these lawsuits and the SEC and also SEC enforcement actions is they're not quick. It doesn't it doesn't happen overnight. We're just now starting to see scammers and pump and dumpers from the meme stock period, from the COVID bubble, start to be brought to justice, like the Zach Morris crew and those guys that we've talked about. So yeah, let me see if I can fix that. Sheesh. Charlotte, are you able to type Manuel? It's not showing any, it's not showing, all it can say, all it says is that I can put her in timeout. It doesn't say anything else about timeout. So Charlotte, that was done in error. You might have to wait 3 minutes or something, but we apologize. Yeah, I wish I could. Apparently I can't. Okay, let's see what we got here. Think about wrapping this thing up. 9 o'clock. Let me see what's going on in Telegram. So they changed it. Okay. Oh well. Oops. I saw the secret words. Oh God, is this zero data? Oh my God, is this zero data? Oh fuck.
Check it.
Oh God. Here's a fucking Muppet. You want to talk Muppets? Here you go. By the way, fucking fuckboy music. I hate this fucking shit. Stupid fucking intros.
Data zero. Sorry, I took a little bit of
zero data.
Of a break, had to decompress, and I suggest each and every one of you do the same. Hop away from the charts, get away from all this madness, the FUD. But guys, we are closer to the end for AMC. There's so much fear, uncertainty, and doubt in the community, and we also have influencers, everyone attacking us from different angles. AMC's under psychological attack. I'm telling you guys, you gotta stay focused on the charts, the facts, the data, and the psychology. This video is a absolute banger, so don't miss a second of it. I'm telling you guys, don't miss a second of this video. It holds great valuable information and
yeah, right. Listen to that narcissism. Listen to that fucking narcissism. What an entitled fucking prick. God, I can't fucking stand this guy. I don't know what it is about this clown. It makes me want to fucking punch his fucking face. I'm not advocating violence.
I need to hear everything I'm about to say in this video. So without wasting any more time, let's go ahead and hop in the charts, the facts, the data, and see what we have.
The markets are about to get crazy, y'all. Get ready for this upcoming trading week. Had to take a couple days off, went on a little mini vacation, needed that time to decompress. And guys, I suggest you do the same. Get away from the charts, get away from all the economy talk, get away from it all, man, and just go relax. Get away from the charts and take some time for yourself. Work isn't.
Yep. Just like Wrench Capital said to do. God, these guys are so fucking retarded. These guys are, and they just don't get it. They don't get it. Okay.
But so is that play. That's why I said, I'm going to be pushing to the upside, setting that. So let's go ahead and check out the charts and see what we got going on. So SPY is going to be pushing to the upside, setting that major bull trap that I'm telling you guys. The SPY is going to make everyone think that we're going in a new bull market. I'm telling you guys, this stuff's going to be bad, but a major market crash is coming. This is the time to be extremely fearful when it comes to stocks like NVIDIA, SPY, Apple. When it comes
Seems
to
like maybe has he been watching my fucking videos now?
I told people to get out of this play after this massive pump. In my Discord, I told people to get out of this stuff as well, because it is time to be fearful on these types of plays. They might have a little bit more upside on an explosive blow off top. So what's going to basically happen is, go ahead and look at SPY for you guys. Basically what's going to happen is we're going to have a blow off top. So you have your 3-peak top right here. This is a macro trend as of now. Basically, this has been about a 2-3 month trend to the upside, as you guys can see. And we have a 3-peak top right here. 1, 2, 3. What's going to happen is we're going to have a blow off top coming up to about this 430, 435 range, 425, around that region. It's hard to say because we could get a nice major push to the upside, hitting this overall macro upsloping resistance and then hitting our head, and then the bottom's going to come flushing out on this thing. The market is not confident. Everyone knows that the macroeconomics are bad. Everyone knows that a recession is coming. But right now, the market can remain irrational longer than people can remain solvent. So what it's going to do.
Everybody knows. See that when people start saying that, that's where I start to get skeptical. That's honestly, that's a contrarian indicator. But at the same time, it's also a predictor of, in a way you could say that it is a predictor or explainer, at least, of what is happening right now. Okay.
Is get the last little bit of a liquidity because a lot of people are short the market right now. It's going to get all of that shortness out, reset the market, make people think it's bullish, and then right when it starts to go bullish and people start to go bullish, they're going to get wrecked to the downside. This market is brutal, guys. If you don't know what you're doing, if you don't know how to trade, like if you don't know how to move in these markets, it is tearing people apart.
Now, this is interesting because this guy, a couple weeks ago, he was Mr. Bullish. We're in a bull market. Everything's turned around now. Blah, 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 blah. We're going to all-time highs. Now he's saying, oh, it's time to be fearful. Oh, it's going to collapse. Oh, this market's brutal. I had to take a few days off to decompress. What did you lose your ass or something? I don't know. Anyway, in the debt ceiling deal, don't even get me started on that garbage. There was never any risk anyway. First of all, there was never any risk. And these 20-year-olds, they have no fucking clue. They listen to fucking Charles Payne, who is a political hack, and they get all these fantastical ideas that, oh, they're going to default and all da. That's number one. Number two, where exactly was the fear? Where was the crash based on debt ceiling fear? But all of a sudden, we're going to have a relief rally. That's what Bloomberg was saying. Oh, we're primed for a relief rally. Well, what are we being relieved from? The fucking thing's already up 10%. The NASDAQ's up 30 fucking percent year to date. These narratives are such garbage. And furthermore, just beyond all of that, great. They raised the debt ceiling. We can continue to, number one, we can continue to pay our bills. Number two, we can continue to, have money flow in and out with a higher, limit of debt. That's bullish for the market. Give me a fucking break. The man-children of Wall Street will find any way to line their little pockets. Yes, I fucking hate Wall Street. I hate the narratives. I hate the bullshit. I hate the people. I hate the players. I hate the fucking system. I hate it all. It's garbage. Makes no sense. None. It's a massive scam from top to bottom. Top to bottom. But that doesn't mean you can't make money. You just have to know and have realized and observed this before. Now, I know I'm going to get people that say, well, it's not a scam. Oh, it reflects the valuation of companies. And, oh, what about fundamentals? Yeah. Maybe ultimately, but it can be detached for far long enough for people to get fucking crushed. And then, that's the time element. Like, I've been right a lot, but I was just too late because they held it at an irrational, oversold or overbought level long enough that it fucking squeezed me out. So fuck Wall Street. The system needs to be completely overhauled. It doesn't work. It's broken. This bullshit, to me, proves it. And I can only imagine what it'd been like being around during the .com and or 1980 or 79, 80 inflation thing. It's just, you know, it doesn't reflect reality at all. It reflects greed among greed among the basically the ownership class of our society. That's all it is. It's a circle jerk for the rich. Let's be honest. It's a fucking circle jerk for the rich. That's why, in my opinion, that's why these people, these fucking nobodies, these losers, these hourly employees, no offense, who have these YouTube channels, and I'm another one, but I'm not saying that irrational shit. I'm saying, look, what do you think you're doing here? This circle jerk is not for you. This is not your circle jerk. Your circle jerk is the casino. Your circle jerk is FanDuel and DraftKings. This circle jerk, if you want to play in this circle jerk, you better have a big, ding dong to hang with these cats, because you will get blown away by a fire hose, my friend, for lack of a less gross analogy. But I mean, yeah, this is what happens. You know, this is what happens when you have an electorate, you have a society that is basically akin to sheep. Really. You have a society that is buried in their phones. You have a society that is buried in TV, movies, all this distraction, doesn't value critical thinking, doesn't value opening their eyes and seeing what's actually happening, rather live in a fantasy world, courtesy of every corporation. Yeah, it's a garbage society, unfortunately. Unfortunately. But you know what? That doesn't mean, like I said, that doesn't mean that there aren't opportunities. And if you're trying to, um, if they're trying to, you know, do that, then you can do that. But, um, you know, and I don't think that this is for entertainment purpose. I mean, laughing at these clowns, yes, but I mean, at the end of the day, I don't do disclaimers. I don't need to do a disclaimer. Disclaimer is irrelevant anyway. If somebody wants to sue me, they will sue me. Doesn't matter if I say, not financial advice. But unfortunately, you know, people with weak and who are less susceptible, or people who are more susceptible to FOMO and peer pressure, let's say, they can't keep those things straight. They can't keep those things straight. And they hear these guys and they hear them say, "Oh, this is for entertainment purpose only." But what does that really mean? They know that it's just a legal disclaimer. They know that it's said with a wink and a smile. So yeah, I mean, the disclaimer thing, I've always found that to be rather silly, because it doesn't matter. If I want to sue you, I'm going to sue you anyway. And depending, if I have a case or not, that disclaimer is meaningless. But yeah, the ones I'm talking about, that's what they say. But of course, that's not what they mean, because they want you to pump it. They want to pump it. Nothing makes sense. No more inflation numbers come out high and market goes up, trapping all of us in puts. I mean, that's the shit I'm talking about, Chuck. Exactly. That is the shit I am talking about. I mean, if Wall Street can make the fucking market go whichever way they want, no matter what else is going on. Okay, this is my thing. We got terrible inflation. We've got, debt ceiling. I don't even want to say crisis, but just, whatever. That's a thing. We've got, war. We've got all these things, all these negative things. But somehow Wall Street can make the fucking market go up 30% in a shit year, when, there are also people calling for fucking recession later this year. If Wall Street can make the market go up that much, what is the point? What is the actual fucking point? How can you tell? How in the fuck are you supposed to figure anything out? That's why I say Wall Street is the most perfected scam in the history of human beings. It is absolutely the most perfected fucking scam. Think about it. They have people who literally pay millions of dollars of rent a month so that they can locate their fucking servers next to the servers for the fucking stock exchange. Now, you tell me, is that a fucking fair, free fucking system? I mean, seriously. You pay millions of dollars for the privilege of putting your server next to the exchange machine so that it can get data faster? Are you fucking kidding me? What a fucking absurd, bought and sold, paid for fucking system. And by the way, the exchange is absolutely irrelevant. The exchanges are irrelevant now. And the only thing that they really do is sell data. That's all they fucking do. We don't even need that. We don't need the exchanges. But because we're talking legacy institutions, we're talking, generational wealth that's tied up and tangled up in this shit. They have to find a way to remain relevant in the age of Ken Griffin, which is a whole other issue I don't want to get into right now. So on one hand, I mean, and that's the same, we're talking about the same people here who pay millions of dollars to put their computers next to the stock exchange computers because they figured out that they could basically cheat faster. In many ways, the apes had an opportunity to expose a lot of the bullshit, but instead of using the platforms that they were lucky enough to have to actually talk about real issues, they talked about bullshit issues that were non-issues, that were nothing burgers, and they made it about themselves getting rich instead of what they actually said they were interested in, which was but my thing is this: if you're getting screwed, if you're getting scammed out of money, and you know that you are, and you know that the system is fucking fraudulent and practically a scam, and things are not what they seem, and people lie right to your face, and it's like a bunch of 7th grade girls that's influenced by the most ridiculous fucking bullshit rumors that are not based on any reality. Why would you keep coming back? I mean, really, in my mind, what should have happened in 2021 was retail investors should have fucking left the stock market en masse. Retail investors should have pulled their money out and said, you know what? You are a fucking scammer. I am not giving Ken Griffin another cent. Fuck AMC. Fuck this whole goddamn thing. It's all bullshit. And I'm not going to lose money, willingly. I'm not going to be a willfully ignorant fool, keep throwing my good money after bad when I don't even know where I'm putting it into. It's going into a black hole. That's what should have happened, in my opinion. Instead, they fucking doubled down. I mean, go figure. Go fucking figure. That's a long term, over the long term. Yeah, Manny, over the long term. Okay. Good point, Lynn. They built a pretend family to offset the loneliness of the pandemic. Family became a movement. Now they feel impotent. I mean, important. Yeah, they do feel impotent. I mean, they are impotent. They feel important. Okay, let me pop over to the futures here. So, like I said, in many ways, this could have been seen as some kind of extension of like Occupy Wall Street, possibly, which, really didn't result in much, if anything. But I mean, I'd be lying if I said I didn't agree that, this shit is absurd. It's completely ridiculous. And, I'm sorry. I apologize in advance to my boomers out there. And I love you guys. You guys are not the problem. This is not directed towards you. Okay. But this generation, the generation of this post World War II, let's call it that. I won't use the B word. This post World War II generation that's still hanging on to power is sucking us fucking dry. And they need to fucking go the fuck away. I mean, seriously. Why do we have Congress people that are 70, 80 fucking years old? I mean, are you kidding me? That is a desperate fucking clutch at power. It's a desperate clutch at status quo. You have fucking someone like Dianne Feinstein, Nancy Pelosi, all of these clowns, 60, 70, 80 years old. The president, the last president, 70, 80 fucking years old. Yeah, that's who we need. That's where the leadership, that's where the future is. It's all connected. All connected. There is no effective get rich quick scheme. That's the problem. Yeah. That is the problem. You can get ahead, but as quickly as you get ahead, it seems like you get behind or you lose it all or you get back to where you started. So, and that's where I'm at right now, unfortunately. Oh well. Oh well. It's a small price to pay for, some entertainment and to stay connected to, what's going on here. All right. Well, been a good stream. Enjoyed myself, and hopefully others have as well. Let's play. I'll play you out here with something. Let's go with you know what? Thanks, Banny. Collecting dividends. See, I'm not really. I mean, no, not for me. For me, no. But there are people here who are interested in dividend investing. I'm a short-term guy. I'm a trader. I'm a speculator. I'm a gambler. That's what's exciting to me. You know, for what I talk about here, at least, and my active trading. I don't really talk about investing, long-term investing, and there's plenty of people that do and that know a lot more than I do, and are interested in that and exploring that. But I think I want to end with this here because we've heard people talk about this. This is an older video, okay? This is an older video. It's from what, 9 years ago, I think, 11 years ago. Wow. But there's so much misunderstanding about short selling that and particular short selling bans. We've heard this, we've seen this in the news lately with the banks, which if we've heard anything I've said about it, I believe it's total garbage. It's not even. I mean, it makes no. It doesn't even make sense. It makes no sense. It's the same ignorance that just permeates the news. But this video is called "Why a Short Selling Ban Won't Work." It's about 15 minutes long, from 2011, and I'm just gonna let's play it out. I think I've seen it before, but I'm just gonna watch it too. So, if you want to stick around and watch this video and learn a little bit about short selling and the reasons why these types of bans don't actually help the market not go down more, stick around and watch it. Otherwise, I will see all of you in the next stream. We might do a tier list tomorrow. So keep an eye out for that. Welcome to the new people that we had here tonight. I hope you decide to subscribe to the channel. And if you don't mind, throw a like to the video stream, and keep your eye out for a couple streams a week that we do. Yeah, we have the Telegram group that is linked in the description of the stream there. So you can join us there if you like. Yeah, so I'll get on with this here. Why short selling bans won't work. And I will catch you soon. Happy Memorial Day.
So today's video is going to take on the issue of short selling. Should it be banned? Is there any point in banning short selling? And I'm going to argue that no, there isn't. In fact, it does much more harm than good. But first of all, what is short selling? That's quite a good question, because actually there are quite a few ways you can bet on prices falling. And that's the basic thing to remember. Someone who claims to be short in the market or short selling is basically betting on something, whether that be a share, a commodity, or whatever it happens to be, falling in price. Whereas of course normally most investors reckon they'll buy something cheap and sell it more expensive. But if you think about it, you could also make money in theory by selling something at a high price if you could then buy it back later for less. That's also a profit. So worth bearing in mind that in a financial market there are in theory two ways to make money. If I buy something for say £10 and later sell it for 100, then I make a profit of 90. But if I could do that first and then buy it back for 10, I'd also make a profit of 90. And short selling essentially is the way that in the market you can do one before two. Sell something before you buy it. Okay, how's it work? Well, first of all, let's take a look at short selling of shares. Now, there are other ways to bet on prices falling, but we'll worry about those in a moment. The one the regulator's focusing on is what's called short selling of shares. So what is that? Now, the bogeymen in the financial markets at the moment are hedge funds, and they are in some way what the regulator's trying to target. So let's do an example involving a hedge fund as the short seller, the crook, if you like, the person who should be banned and outlawed for trying to do something devilish like short sell, bet on falling prices, and we need someone who's going to lend them the shares they're going to short sell. That would be a pension fund normally, via a custodian such as say State Street. Now I'm going to simplify this example. You're not going to get a degree course out of this morning's video. It's going to be the basic principles, and I make no apology for the fact I'm simplifying how the mechanics for short sale work just to illustrate the point and get to the main point, which is why banning it doesn't really make much sense, especially not the way it's been done by the European regulators. Right, so what is a short sale? Well, let's put two players in. Let's have a hedge fund and let's have a pension fund. In other words, we're going to have a borrower and a lender. And what's going to happen, sounds a bit weird, what's going to happen is the pension fund is going to borrow a load of stocks. The hedge fund, sorry, is going to borrow a load of stocks from the pension fund, sell them, try and buy them back in the open market for less, and then return them. Now, here's how it works then. So the hedge fund, I'm going to keep it nice and small, says to the pension fund, I'd like to borrow 10,000 shares in, well, anybody really. A bank, let's say. So the hedge fund thinks the particular bank shares are going to fall. So it borrows 10,000 shares from a pension fund. It says, I will return 10,000 shares in this bank. Now the bank could be anything. It could be Soc Gen or it could be Barclays. It doesn't really matter which bank. I'll return those in a while plus a fee. So the pension fund isn't going to lend the shares for nothing. So the pension fund lends 10,000 shares and says, I want them back at some point in the future, plus a fee for lending you the shares. After all, why would you lend shares you own for nothing? Okay, so that's step one. Step 2, the hedge fund, immediately having got the shares, sells them for, let's say, £2 each. Now, where is it selling these shares at £2 each? The answer is in the stock market. Okay, so it's doing a sale transaction to sell 10,000 shares at £2 each. And what it then does is wait, hoping the price will drop. This whole thing, as far as the hedge fund's concerned, is a gamble on share prices falling. So let's say, having sold the shares, a couple of days later they have fallen, so now the hedge fund buys them back, and let's keep the numbers easy, at £1 each. Okay, and then step 4 is the pension fund will want 10,000 shares back at some point. Remember, at the start of the example, the pension fund lent 10,000 shares, so step 4 is for the hedge fund to get 10,000 shares that it borrowed back to the pension fund plus a fee, a lending fee. Okay, now, if this is the way that it all works, everybody should be happy in theory. Why? First of all the pension fund's done is earn a fee for lending 10,000 shares to a hedge fund. Hasn't done any trading, so the pension fund lends out 10,000 shares and gets them back, maybe a few days or a few weeks later, plus a fee. So the pension fund's quite happy because funds hold lots of shares for a living. So they might as well make some money out of them. A bit like being a second-hand car dealer, you've got stock sitting on the forecourt, so why not make a bit of money by lending it out if you could. So the pension fund's quite happy. I mean, yeah, the share price drops, so the shares it now owns are worth a bit less than they were, but then that's going to happen anyway. And after all, pension funds have to hold a certain number of shares. That's their job. They can't just liquidate it all into cash. So the pension fund, the lender, 10,000 shares back plus a fee. Quick point to note, does it need to be the same 10,000 shares that it lent? No, shares are fungible. They all look the same. 10,000 shares in SocGen looks the same as another 10,000 shares in SocGen. So the pension fund isn't worried about getting precisely the exact share numbers that it lent back, as long as it gets back 10,000 shares in the same bank at some point plus a fee. Okay, what about the hedge fund? Well, the hedge fund was doing this as a gamble on prices falling, and luckily prices did fall. So the hedge fund basically has taken out, very simple numbers, a profit, selling for £2 the shares that it borrowed, buying them back in the open market at the London Stock Exchange for £1 each. So the hedge fund takes away a profit of £1 times 10,000 shares, which is £10,000. Okay, minus the lending fee. Obviously, we have to pay the pension fund. Okay, so the hedge fund has taken a big gamble. It's borrowed 10,000 shares, sold them, all right, and the idea of short selling is selling shares that technically you don't own, you've just got on loan, made a profit of £10,000, and then, having bought them back, returned them to the original pension fund and said, here's the shares plus your lending fee. All right, now that is, on this side, short selling. Again, the idea is simple, to make money. It's the only reason for doing it. Okay, why would you ban this? What's happened is 4 countries have got together, their regulators, France, Spain, Italy and Belgium, and said, this is evil, this needs to be banned, this needs to be outlawed. Basically, we can't have hedge funds betting on bank shares falling in price using this mechanism called short selling. So what they've tried to do is introduce a temporary ban and say, basically, this can't happen for the foreseeable future on certain stocks that we nominate. And I suppose the key question is, are they right to do that? And the answer is no. I have 2 problems with a ban like this. One, the way it's been implemented is flawed, and secondly, the principle of banning short selling is wrong too. First of all, the mechanics. What have they actually done? Well, they've tried to say that as basically 4 countries, so selectively as 4 European countries, will outlaw this practice. And the reason we don't like it is because it drives down share prices. They accuse the hedge funds of betting on prices falling and therefore accentuating the falling prices of certain bank stocks. So they said, right, we're going to outlaw this as 4 countries, and the question is, will it work? Well, number one, it's a kind of partial ban. You can't have some countries outlawing short selling and others not, because hedge funds will simply move to jurisdictions where they can still do it. Equally, what's the point of banning short selling on just a few stocks? Because all that's going to do is target the short sellers' attention on other stocks. So what problem is that solving exactly? And also, what are you going to ban? You can't just focus on short selling via shares, because there are derivative contracts, which I address in other videos, which allow people to short sell. Without going off on a tangent on this video, I want to stick on the theme. There are derivative contracts, futures, options and swaps and so on, spread bets that allow people to bet on share prices falling. So the question then becomes, is it enough to just ban short selling of shares in the way I've suggested here, or do you need to widen the ban, and if so, to cover what? And essentially, how much of the derivatives market do you try and cover as well? Okay, so that's the first problem, is even if it's the right thing to do, doing it sort of bits and pieces, piecemeal, is no good. But the second problem is a more fundamental one, which is banning short selling is inherently a daft thing to do. Why? Okay. First of all, in my example, the hedge fund is taking a big risk. Short selling is risky, all right? And if it backfires, the people that do it pay a heavy penalty potentially. Imagine my last example had gone wrong for the hedge fund. So, same facts. I'm a hedge fund. I borrowed 10,000 SocGen shares from a pension fund, agreeing to return them in a few days' time plus a fee. I then sell them on in the open market, gambling that prices fall. They don't. The share price doubles from £2 when I sell to £4 by the time I've got to buy them back, because the pension fund wants them back. So my lender wants the shares back. In that situation, I've got to go into the market having sold the shares for £2 and buy them all back for a lot more. All right, that's going to be expensive, and it might even be time consuming. What if I can't find someone to sell me the 10,000 shares that I need to get hold of to return them to the original borrower? Basically, I've got a bit of a problem. So bear in mind that short sellers are taking a heck of a lot of risk. If a short sale backfires and they end up having to go out into the market and find the shares they've sold short and pay a lot more for them, it gets very expensive very quickly. And in some situations you can get a short squeeze, or a bear squeeze as it's called, and that's where basically I can't even get hold of the shares I'm supposed to return to the original lender, and then things can get very messy. So basically, short sellers have a good reason to do what they do. Number one, if a share price is falling, if a bank share price is falling, it's not due to short sellers. Short sellers are the messenger, and shooting them is shooting the wrong person. Basically, if a bank's shares deserve to fall because the bank is badly run, has exposures to all kinds of countries in terms of debt that it shouldn't have, is lent to the wrong people, all a short seller is doing is taking advantage of those facts. So you've got to think about horses and carts at this point, if I can use that metaphor. Basically, the short seller isn't triggering the fall in the price of the share. It's bad management at the company they target that causes the problem. All a short seller does is take advantage, if you like. So banning short selling, from at least that perspective, makes no sense. Secondly, if you ban an activity that lots of people use in the market as a trading tool, you reduce the number of trades, and bizarrely you increase volatility. All right, so far from decreasing volatility, by taking out short sellers, players in the market, you actually increase it. So it can have exactly the opposite effect, the one you intend. And let's be specific here. What is the point of a short selling ban? It's to stop share prices falling. Does it work? No. Let's look at a recent example in the UK. Over here, 4 months after Lehman Brothers collapsed, there was a short selling ban in the UK market imposed by the UK regulator, and basically from September 2008, certain shares were on a banned list. You were not allowed to do what I just suggested as a hedge fund. What happened? There was a 41% drop in those shares over that period. Okay. The US tried a similar 3-week ban starting in September 2008 after Lehman Brothers collapsed. They said our banks collapsed, we've got to stop people short selling. What happened? Well, Bloomberg have done some research suggesting that of the 880 stocks that were banned as part of that short sale, I know that you couldn't short sell them, they fell 26% over that 3-week period, whereas the S&P only dropped by 22%. So not much evidence there in either case of short selling bands doing what they're supposed to, which is to decelerate or stop altogether shares from dropping in price. Okay, you might get an immediate effect the day the short selling ban's announced, you might get a quick bounce, but the evidence suggests that short selling bans actually do not work, and worse, they reduce liquidity, and also that can increase volatility, and they also stop hedge funds doing some of the things they need to do day to day in order to make a living and survive, and that's hedging positions. In other words, to cut to the chase, hedge funds need to be able to run long and short positions, not always as bets on the market, but simply to hedge existing exposures. So, you know, short selling is portrayed as this sort of evil way of making money from falling share prices and misery, whereas actually sometimes the motivation behind a short sale is simply hedging, and that's something a lot of funds need to do and want to be able to do. So if you just arbitrarily close that part of the market down, you are effectively making the market less efficient than it should be. So I disagree with the way the short selling ban's been imposed, and I disagree with the idea there should be a short selling ban in the first place.